Hi, Sumit.
Hi, Neil. How are you?
I'm good, thank you. How are you?
I'm doing good. You have a great setup over there, huh? So all this is your office setup?
Yes, this is my office setup.
You,
Work from
you're
home.
living in work from home culture, right? I'm
Yeah.
also having that advantage. It's
Yes.
brilliant. Let's see how long it goes.
Yeah.
So, guys, today, as promised by Nehal, on behalf of all of
Oh
you,
no. No.
that we will keep the cameras on from tomorrow. So, this is the tomorrow. So, today you have to keep the camera on. Yesterday, I gave you attendance. Try to understand all these sessions are recorded. If I keep giving you attendance, even with a closed camera, I will be the culprit. And my job is important for all of you, also, right, guys? Because you will not get a good trainer like me. I can bet on it. Just kidding, guys. So keep your camera on. Yeah, at times when you need Rahul ki koi aa raha hai background mein, if someone is coming in background, your mom is coming, your sister, daughter, whoever, my
Yes, sir.
wife, है ना? तो you
Mostly
can switch off.
dog came. Yes, sir. Mostly my
हाँ तो
dog came at. Yes, sir.
हाँ तो ऐसा कुछ होता है और आपको लग रहा है कि यार ये अनकंफर्टेबल हो जाएगा, तो आप वो कर देना, स्विच ऑफ कर देना कैमरा. Try to
Yes, sir.
keep
Okay,
it
sir.
on as much as possible. यार हम सब प्रोफेशनल्स हैं, मैं ज्यादा मुझे तो ये आइडिया इतना अच्छा लगा नहीं, but for me, Ematicus is my owner, right? For me, Ematicus gives me money, and that money helps me bring happiness to my life, right? My daughter is fed on that money. My wife is fed on that money. Right now, my wife is unemployed. She is taking care of my daughter, so that is why she took a break of 6 months. तो वो सब अभी उसी के बेसिस पे चल रहा है. अभी देखो कल सारा पैसा आया इमार्टिकस से, और ये लैपटॉप मैंने पे किया था, उसका मैंने ईएमआई भर दिया उससे. So everything is attached. So yeah, and in fact my retirement is also getting prepared because of the money which Ematicus and institute like Ematicus give me. वो सारा पैसा मैं इन्वेस्ट करता हूँ, वो मेरे रिटायरमेंट में काम आएगा. एंड रिटायरमेंट इज अ वेरी टफ पीरियड, राइट? हॉस्पिटल्स, रिटायरमेंट में दिखता है हॉस्पिटल्स है, पेनफुल, आपका क्या हो जाता है उसे बुढ़ापा बोलते हैं ना. सो ओल्ड एज इज वेरी डेंजरस, राइट? सो इसीलिए हो सकता है, तो चालू रखिएगा. इट वुड बी रियली गुड, राइट? मयंक, शुभलक्ष्मी, प्रियंका, खामकर, शिरीष नायर, दीक्षित पुरोहित, प्रसाद. I can't say much to Luis sir because Luis hasn't come today, is it? Yeah, Luis is there. If it is possible, if it is at all possible, try to keep your cameras on. In between, if you want to switch it off, it's fine. But yeah.
Hi, Sumit.
Hi, Luis. How are you?
I'm good. How are you?
I am doing good. Great. I'm doing
At
great.
last, you can put a name, face to the name.
Yes, we finally added a face to the name. It's very important. It's good. It's look good. So that was a suggestion from the Ematicus कि आपका training will become even more effective because you would be able to see the face. अभी मुझे face देख के पता चल जाएगा कि who is feeling sleepy and who is really understanding it, and who can I ask a counter question, because and all lot of things they give the inputs to us कि बहुत
Yeah.
सारी चीजें हैं जो would be able to possible if cameras are on. But I will not force you guys, honestly. कभी कभी करना ताकि it becomes we feel lively, right, in our normal session like this. So Vijay Kenya, we saw a younger Vijay Kenya yesterday, and we are seeing an older Vijay Kenya today. कल आपका जो फोटो था, it was your childhood photo, right? And today we have you yourself. Great to have you. Ayushi, finally, I can see you. Subhalakshmi, I can see you. Great. That's still thinking. Richa is still thinking, should I switch on my camera or not? Should I do it or not? It's fine, Richa. It's fine. If you can do it, it's fine. Everybody good. Hi, Surbi, how are you?
I'm good. I'm good. How about you?
I am doing good. So finally, I can see you now. Great. Okay, cool. So let's start the session. Let me share the screen. So this is the attendance of some other session I just completed. It was 12 to 4 session. Just completed. Okay, Shashank, I understand. Oh, Ganpati preparation. Mayam, Ganpati preparation. Okay. Oh, yeah. So Ganesh Chaturthi is on 31st. So you
Yeah,
are
so
going.
we have holiday today, right? So we all are working today itself.
Can you just
like
for a
I
second
won't.
keep the can you just
No, I
keep the
actually I
camera
really
on for
won't
a
be
second?
able to attend the whole lecture also. You know that the decorations and all, each and everything
बहुत बढ़िया है यार,
will
बहुत
be
बढ़िया
done
भाई,
today
बहुत
itself.
बढ़िया. It would be really interesting to see. अभी पूरा वो you would have dedicated one space in your home कि यहाँ पर.
Yeah, yes, yes.
And how many
The
days?
whole thing. It will be for 1.5 day. I have only for 1.5 day, but we need to complete each and everything the same, which it
Okay,
happens
the
for the
activities
10
you have
days.
to do is the same, but you will
Same
keep
thing.
it for only 1.5 day.
They
That
are
you,
like yeah, we all are working, so we won't be able to do for more days.
आप वो
So
कर
we
दो
do for
फिर then
1.5.
it's a commitment, and if you do not do फिर वो you don't feel
Yes,
good at
yes,
it.
yes. Yeah.
You do
So it's my
the Seva
second year.
Puja every day,
Yes.
and you do the worship every day, morning, evening.
Yes.
What do you say, Aarti and all? You have to perform all
Yes.
those activities daily basis. Hmm.
So like we won't be able to do for like whole 9 days. We do for 1.5 days. Some people do for 3 days. Some people do for 5 days.
Correct.
It's like that.
Correct. Nice, nice, nice. So,
Yes.
so you live in, I forgot, you must have told me, where do you
I
live?
live in Thane, Mumbai.
So Mumbai तो मतलब कि the core है,
Yeah,
is the
like, so
epicenter of.
for us, it's like after 2 years we are having some fun for this festival.
Brilliant, brilliant, brilliant. Great, great, cool.
So for just for this session, I won't be able to.
It's fine, it's fine.
After this,
It's
I will
fine.
be like
It's
prepare
fine,
for
भाई,
prepare.
it's fine, it's
Yes,
fine,
yes,
it's completely. अब चालू करते हैं हमारा सिलसिला. Let me go to Marticus batches. Let me go to CIBOP 32. We were in forwards and futures. We had seen one example of forward, right? Today we will see another example of forward. कहाँ है, कहाँ है? Yeah. So this was the example we had seen where KKR hedge fund is behaving as a counterparty 1 and JPMC investment bank behaving as acting as a counterparty 2. Please remember, guys, in forward contract, both the parties have obligation. I'm stressing this on this point because as we will move towards other types of derivatives, we will find that identifying who is having obligation, who is having right would be very important, as you will see more evolved types of derivatives. So right now over here, both the parties have the obligation to perform whatever they have promised to perform at the time of entering into the trade. So one of the party is having a long position. Long position is basically means that it is acting as a buyer of the in the transaction. That is means it is promising to buy, and it is a gentleman promise or gentlewoman promise. It is not a kiddo promise, right? If you are promising in a forward contract, you are liable to perform as per the act, right? Because it's a contract, and when you sign a contract, it's important that you deliver whatever you have promised. So what you are promising as a long position holder or a buyer of forward contract is that you are going to buy the underlying asset, whatever that underlying asset. An underlying asset can be a commodity, it can be metal, it can be bullion, it can be common equity shares, it can be bonds, it can be anything, any financial assets or non-financial assets. And we see both kind of assets, right? Financial assets as equity, derivatives, bonds, and all, and non-financial assets as uh, energies, weather, gold, silver, commodities, agri commodities, metals, a variety of other non-financial assets we have seen. So the underlying asset can be any of those. So whatever that underlying asset is, the forward contract buyer is promising to buy that at a pre-decided price, a pre-decided future date, at a pre-decided price on a pre-decided future date. That date can be 1 month from now, 2 months from now, 3 months from now. And if it is a OTC contract, and forward is a OTC contract, so there the timeline can be even 5 years, 10 years also. We had seen yesterday, right? OTC contracts can be highly customized between both the parties, and if both the parties are agreeing to enter into the contract or delivering the contract in maybe 10 years, then let it be 10 years, right? So, and the other party which is acting as a seller, that is forward contract seller, is basically has the obligation because it is promising to sell the asset on that particular date. That is a pre-decided future date in a pre-decided quantity of a pre-decided quality and a pre-decided asset, underlying asset. That asset can be anything, right? So both the parties are entering into this contract to do an act of exchange of asset and value on a future date. All of these are customized and all of these are already decided as per the contract, right? So that is one thing. Both the parties have the obligation here. One of the party has the obligation to buy the underlying asset at a forward contract price. Another party has the obligation to sell the underlying asset at a forward contract price. Now, we had seen one example. We'll see another example today. There are examples of Britannia Industry Limited. Okay. See, guys, Britannia, and we know Britannia for selling a lot of things, breads, biscuits, right? Most of these things you will find requires wheat, right? It requires wheat. Without wheat, can you manufacture bread? No. So people who think that no, we can manufacture bread with maida, but we need to understand maida is also a byproduct of wheat only, right? Those who so I was not aware till 2014. Till 2014, I used to think wheat and maida are two different items, and wheat is healthy for the body, and maida is not healthy for the body. You should not eat maida, and you should only eat wheat. I one day entered into an altercation with my mother. My mother had made something of maida, and telling you most of the sweet dishes in Rajasthan are made of maida. That because maida gives a lot of flexibility, taste, and all. So I was saying, well, maida is very bad, and I had read some article in 2014, and she said, "What is the difference between maida and wheat?" I said, "दोनों अलग है, बस अलग है." She said, "Boss, maida is also built of wheat only. It's only that the fine crux of wheat is maida, right?" So what the point over here is that Britannia as a company needs to buy a lot of wheat, right? It needs to buy a lot of wheat. But wheat is something which is not produced around the corner. Wheat cannot be, because it's a farmer-oriented product. It is a farming-oriented product, right? So you cannot have wheat like kurkure. Every time availability will be there. But if you had the intent to eat kurkure, go to the market, buy kurkure, because kurkure will always be available. That is what you think. And that is reality also. But wheat is not like that. Wheat in bulk quantity might not be available all the time, because wheat is not produced all the time. And if you are the one who wants to buy wheat in bulk, try to understand, we are talking about Britannia, who is going to buy the wheat in bulk, which will take care of the demand for full year or maybe at least 6 months. So if you want to buy it in bulk, most of the time you'll have to buy it through a farmer or a farmer organization, right? So that is the crux. What I want to tell is that Britannia needs to really plan for wheat. And now wheat is something which is not a commodity which get produced, agri-commodity which get produced throughout the year, one. And two, wheat prices are not going to be fixed throughout the year. In last 2 months, if you guys are tracking the news, you will find that wheat prices are fluctuating haywire. Wheat prices were going up, then what government said that you cannot export wheat. The wheat prices normalized to a bit, but people in export market became smart. So what they did is, rather than exporting wheat, वो बोला wheat को आटा में convert करो, आटा export करो. Government has banned for export of wheat. Let's start exporting atta. The fine tune, right? So they started exporting atta. So suddenly wheat prices again started going up. Government said, was we played them, they again played them us. We played them, they played us back. So now what government did now? 3 days back, what government did? government said you cannot export atta. So now you can't even export atta. So further, the wheat prices should come down now because you can't export atta. So what I'm trying to say is that the prices of wheat are fluctuating as government is coming up with new things, and it is not only government. There are various factors which can impact the prices of wheat. Sometimes some farmers will collude together, will make a cartel, and will start hoarding wheat in order to artificially I'm not saying it the right word, artificially increasing the price of the wheat. They can do something like this, right? So there are many reasons that wheat prices can fluctuate. So think about it. If you are working in Britannia accounts or finance department, you need to you can't increase the price. So now look at Britannia's point of view. Britannia's bread. If government put a ban on wheat export, government remove the ban on wheat export, again wheat prices will go up. So the purchases of raw material for Britannia will become expensive. But can Britannia keep on fluctuating the price of its bread? कि आज Britannia का bread लेने market में गया, the price was 10 rupees. Tomorrow I go to buy the bread, the wheat, the bread, Britannia bread in the market, the price is 30 rupees. It can't happen like that. Companies can't make the prices so volatile of their products. They need to keep the prices of the product consistent. Look at Parle-G. The one packet of Parle-G 10 years back was also 5 rupees, 20 years back was also 5 rupees, today also it is 5 rupees. But they played it smartly. They have started reducing down the size of the packet. That's a different thing. But then still, price is such a big thing. People are ready to buy a smaller packet, but people are not ready to pay 6 rupees. These products are so price sensitive. And that is why Parle-G do not want to play. Try to understand company like Parle-G fears to increase price. If you do a survey, Parle-G you will find it would be the best FMCG brand, bigger than HUL. We don't see the magic of Parle-G on stock market because Parle-G is not a listed entity. If it would have been a listed entity, Parle-G would have been the most expensive stock in the stock market. I can bet on it. Everybody would rush after Parle-G. Parle-G is such a big brand. Parle-G itself, the owner of the Parle-G itself wouldn't have ever imagined that the uses of Parle-G biscuits can be manifold. People use Parle-G biscuit to eat. People above the strata who do not like to eat cheap biscuits and want to eat expensive biscuits, still they buy Parle-G. This time they do not eat, they give it to their dogs to eat. I have seen people using Parle-G to give to ants. They crush the Parle-G and they put it on Antilla. The house of ant, not the Mukesh Ambani's Antilla. I'm talking about any ant's house is called as Antilla. They put on Antilla every day. I have seen it. I myself have done it many times. So I'm telling you, the usage of Parle-G could be so diversified, nobody would have ever thought of. Right? So still, even after having such supreme power of brand, still Parle-G is not reducing the price of its packet. India is a price sensitive market. So maybe the commodity prices are fluctuating here and there all the way. But companies cannot fluctuate the prices of their product. So this whole long story I want to tell you is because maybe some of you might get into, after your investment banking stint, you might get into a corporate. And you will say, I am an investment banking operations guy. What is my utility in a corporate like Britannia? Or why am I receiving a call from ITC? But you will be surprised maybe, or now after the session you would not be. Most of these companies will have a treasury department. And the role of this treasury department is to keep the control on the cost. Other than there are many roles, but one of those is to keep a close control of cost by the use of derivative, by entering into forward contract or future contract. How? Let's look at it. So Britannia Industries Limited is suffering from a risk exposure. What is the risk exposure for Britannia? The fluctuating prices of wheat. And Britannia is not like Nehal Vyas, Rahul Pathak or Sumit Rathi, who needs to buy only 10 kg of wheat on a monthly basis. Britannia might be looking to buy 1 lakh kg of wheat or 10 lakh rupees of kg wheat for per month. Because they have to convert that wheat into so many food particles which they send to all of us, right? So they have to buy so much of huge quantities, 10 lakh kgs of 10 lakh kgs of wheat. But they do not need it today. They need it 4 months from now. They know what is the price as of today. But what they need today, for that they have enough wheat already available in the godown, which they would have bought maybe 3 months back. Now they are worried about the availability of wheat at a certain price 4 months from now. Because after 4 months, they have a huge order to sell the biscuits and breads, every day's order. You can say no, so what is the problem? They can buy the wheat today at today's price and keep it in the godown. But that is also a problem. One, there is a huge storage cost. If you buy that kgs of not gold, my God, 10 lakh kgs of gold would be what? Yeah, but if you buy that much kg of wheat, you need huge storage space, right? One. Two, these are perishable items. The quality of wheat would not remain the same 4 months from now. And they need to maintain the quality. They are not Kingfisher. They are not from the house of Nirav Modi. Ki kuch bhi becho chalega. They need to maintain their quality. Because in 4 months, if you do not maintain the wheat storage properly, you'll find a lot of microorganisms getting into that wheat. Those who have so for example, in my house, we have a theory of keeping the wheat for 2 years at any point in time. But then we put a lot of things inside the wheat so that it doesn't attract any microorganism. We need to put a lot of things into that. I don't know what all, but something made of mercury. Something made of mercury they put inside, and mercury is very dangerous, right? If you even have a 1 drop of mercury, it may result into your death. So you have to mix mercury with the sand. You mix and with that sand, and then you put inside the wheat. Then microorganism will not come, or small ants kind of things will not come into the wheat. So you need to take care of it. What if Britannia is not able to do it? And Britannia has to maintain the quality. I'm telling you. Naturals ice cream. Those who live in the western side of the world, of the country, of India, they must be knowing naturals ice cream. They need to maintain their quality. Let me share one incident with you guys. Once, after the lot was ready of maybe 10,000 or 100,000 kg of ice cream, that entire lot was ready. Suddenly, one worker in the natural ice cream factory got to know that a small bolt made of a steel is missing in one machinery. So the owner said, go find that bolt in the factory premise. All the workers are searching for that one bolt, small size bolt, very small size of bolt. Machineries are made of a lot of bolts, right? Everywhere there are bolts. All the people are searching for that one bolt. Even after searching for the entire day, they couldn't find that bolt. Owner said, put this entire 1 lakh kg of, or whatever that kg of ice cream they had produced for that day, 10,000 kg or 1 lakh kg of ice cream, put this entire ice cream in dustbin. Somebody asked why? Because there are people who are not ready to understand it, who are not able to understand it. Arey bhai, you just missed a bolt. Why are you putting all this entire lot of 10,000 kg of ice cream into dustbin? Or why are you dumping it?
Because, sir, they were lost their.
Yeah, even if because when you get ice cream from natural, you get a scoop, right? For 50-60 rupees. I'm a natural ice cream lover. When I go to natural parlor, I take 3-4 scoops. One scoop is not enough for me to satiate my urge to eat ice cream. So you take one scoop. So owner बोला किसी एक scoop में भी अगर आ गया तो मेरा पूरा ब्रांड खत्म हो जाएगा. That is one. But अगर किसी को पता नहीं चला, वो क्रश हो गया है, वो मेटल किसी ने खा लिया है, तो मेरा I don't want anyone to be killed because of my ice cream. I can't see it. Let me bear the loss now rather than loss of life or loss of brand value. So quality for some companies is supreme. They can't deal with it. So try to understand perishable items. You can't hold it. You can't maintain the quality of it. So maybe you can say if they want to buy 10 lakh kg of wheat 4 months from now, but they're worried about the price to go up in 4 months, why not they buy today itself and hold in their godown? But they would not do it because these are perishable items. These are not like gold, where the quality of gold will not go down even after 1,000 years. Right? So think about it from all these perspectives. There are many costs, cost of decaying, cost of storage, cost of holding that inventory. A lot of costs are there, which you have to take care of. So what is think about it. What is the way out for Britannia? It will have to deliver the biscuit 4 months from now. It takes 1 month to produce that much of biscuit. Why? And 4 months from now, it needs to deliver a big order of biscuit, which it will take 1 month to produce. So it will need wheat after 3 months, right? If I have to deliver a big consignment of biscuit 4 months from now, and I know that I will need 1 month to produce that consignment, that means I need wheat at the start of the 4th month. That means after 3 months. But I don't want to store it. But I want to book today's price because today's price look very attractive to me. What should I do? Forward contract. सब problem का एक ही है answer. Derivative. So there are people who ask me derivative is full of speculation and it is a fool's game, and I myself say many times that yesterday also I told you guys, right? I do a lot of investment and I never do trading on derivatives. But there is a lot of economic reason of derivatives. Price discovery is biggest advantage of derivative. Hedging is one of the biggest advantage of derivative. There's a real problem derivative is solving. There are people who would meet, you would meet as an investment bank operations analyst or investment banking analyst. You would find that one day you would be traveling in a train and you will find an uncle ji, and the uncle ji will say, "Oh, beta, what do you do?" And Rahul will say, "I am an investment banking analyst." Well, kya karte ho? I take care of derivatives. Uncle ji will say, "What a fool time you waste your time. There is no utility of derivative. Rather than working on derivative, why not you go and open a tea stall? At least you will be serving tea and quenching the thirst of people. That will add some meaning to your life. Selling derivatives that will not add any meaning to your life because it is all hawa. It is all speculation." And you tell them this story, boss. There is an economic value, right? What you are eating as biscuits or breads, the prices of that remain stable because of the products like derivatives, right? So there is a huge value. So now what Britannia Industry Limited will look for is, and basically you who would be working into the investment banking department of Britannia Industries Limited, you would surprise to one day receive a call from Britannia. "Hey Rahul, can you come and join our treasury department and work into the derivative section?" Rahul will be surprised. Say, "What? Britannia sell biscuit or derivatives?" Don't get confused. they would be doing huge work in derivatives. Why? Because they buy a lot of raw materials, lot of agri raw materials, for which prices keep on fluctuating. And they not only do Indian business, if they are exporting, say it is not only with respect to buying raw materials. If they're exporting, they would be receiving a lot of currency in foreign currency, right? That also the price fluctuates. And we saw one such example yesterday, that how foreign currency exchange fluctuation can be saved off by an hedger like Agrim Export Limited, right? So Britannia Industries Limited will look for someone with whom Britannia Industries Limited can enter into a contract where the today's spot price or a price near about today's spot price can be fixed for a future date, which is 3 months from now. That is the problem of Britannia, right? That is what Britannia is looking. So here come ITC Farms Limited. ITC Farms Limited, not ITC Biscuit Limited. So ITC is into. So ITC is like, ITC is one of my favorite companies. A lot of my portfolio, almost 10% of my portfolio is invested into ITC. So sometimes if I make very good comments on ITC, please take it with a pinch of salt because I might be biased about ITC. So that's the disclosure. So ITC is into multiple businesses. So in one of that business line, ITC is also having huge relationship with a lot of farmers, and they help farmers to sell their produce at a very large scale. They have a large group of farmers who is connected with the ITC. They call it as, I'm forgetting the word. They have named it something. Let's check it online. E-Chopper. They have built something called as E-Chopper, rural India's largest internet-based intervention, empowering Indian farmers. So basically, it helped farmers to sell their produce at a very good price. And as another company which we are just saw in ITC Farmland, right? Frozen vegetables online at best price. So ITC sells all these things, vegetables, pulses, and all of its own farmland, or through that e-Chopal system, having a huge connection with the farmers, right? So ITC Farms Limited, same problem. ITC Farms Limited is facing with the same problem. What is the challenge with ITC Farms Limited? The challenge is ITC Farms Limited had received a call from a farmer or a group of farmers that boss, we will be ready with 10 lakh kgs of wheat 3 months from now. But we want to sell it at today's price. We are worried. 3 months from now, prices can go down. Prices may fall. Farmers want to sell, right? They want to sell at a higher price. So they are worried that future prices may be lower than today's price. But the produce will be ready after how many months? After 3 months. So the farmers of ITC Farm Limited or ITC Farm Limited company is struggling with a problem which is completely opposite of what problem with Britannia Industries Limited is facing. Management of Britannia Limited Industry Limited is facing the challenge of maybe the prices of wheat would go up 3 months from now. ITC's challenge is that maybe the wheat prices will go down 3 months from now. रब ने बना दी जोड़ी, right? Best combination. Enter into a forward contract. One act as a FC buyer, another act as a FC seller. Britannia over here would have a long position because it would promise to buy 10 lakh kgs of wheat 3 months from now, whereas ITC Farmland would act as a having a short position or FC seller because it will promise to sell wheat to the tune of 10 lakh rupees, 10 lakh kgs 3 months from now. Both the parties come meet on 1st July trade date, 10 a.m. Decide underlying asset to be wheat because it is a wheat, the quality of not all the wheats are same. So they have to decide the quality also, A grade, quantity 10 lakh kgs, settlement price 36 rupees per kg. You can see it is a bit higher than the spot price of wheat. And by now, I guess you would be knowing why. Settlement date 30th September, 3 months from 1st July, right? Type of settlement. One is having wheat ready, another one wants wheat. None of these are speculative. Both of them are business people doing hedging over here. One is reducing its downside risk. Another one is also reducing its downside risk, because its downside risk means what? For him, for Britannia, the downside risk is what? That prices will go up. You would think, no, it's an upside risk. No, boss. Both parties are reducing their downside risk only. For Britannia, the downside risk is that wheat prices go up, because its profit will go down then. For ITC, the risk is prices of wheat going down, because its profit will go down then. So the profit of Britannia is inversely related to wheat prices. Profit of ITC is directly related to wheat prices. Because for Britannia, wheat is a cost. For ITC, wheat is revenue. Cost go up, profit go down. Revenue go up, profit go up. So both are protecting the downside risk on physical settlement. Now, this is not 1 kg. कहीं भी दिया चल जाएगा. ट्रेन में आके पकड़ा देना मुझे 1 kg wheat, मैं ले जाऊं. This is 10 lakh kgs of wheat. You need to decide place also. Because ITC will say, hey, come to Europe. I got 10 lakh kgs wheat ready in my Europe farm. Britannia will say, boss, I am manufacturing, my factory is in Rajasthan, Chittorgarh. ITC will say, I don't know anything. You give me 36 into 10 lakh kgs. So whatever the value is, 3 crore 60 lakh rupees to me. Transfer it and take your wheat. Now tell me, the 10 lakh kgs to come from Europe to Rajasthan, Chittor may take 1 month. It can't come on flight. It is not 1 kg wheat that it can come to you in 1 day or 2 days through flight. It can't come through charter plane also. It has to come through ship, and which take times. It is important that, and who will bear the transportation cost? Who will bear the transportation cost? ITC say, no, nothing has been contracted and nothing has been talked about transportation cost and forward contract. I'm not going to bear it. Britannia say, why will I bear it? So this kind of problems can occur. So it's okay to decide settlement place. Ki boss, physical settlement and needs to be settled in Nagpur with proper address. ये address है B1462 industrial area. This gully, ये mohalla, and this city, Nagpur, pin code, this is proper address. This is the settlement place. Right? So all of these would be talked about. Now both the parties would be happy, because both have cleared their downside risk. Both have hedged their downside risk. Now the management of ITC will also sleep their good night sleep. Britannia will also have their good night sleep. I didn't have my good night sleep yesterday night. My daughter kept on crying the whole night, every 1 hour. So, but ITC and Britannia will keep having good night sleep. Why? For the 3 months they are worry less. No worry would impact them. Then comes the judgment day. 30th September. Trucks will arrive. One truck cannot hold 10 lakh kgs of wheat. So trucks will arrive to the address of Nagpur. But money ke liye, though there is no point of taking the truck, it can be a wire transfer in today's world. There was a time when in order to carry this 3 crore 60 lakh, maybe it was required a truck. When the denomination of notes were only 5 rupees or 10 rupees. In fact, we are fortunate that our currency is not devalued to that level. But if you will see the photo of some of the countries where even to buy one bread ka packet, people had to carry a cycle full of money. I'll show you the photos. So things can be vulnerable. We are fortunate in India. I'm very fortunate. I feel very fortunate that I live in India, not in Sri Lanka or some other countries, you know. Because it was God's decision, right? God could have sent us to Sri Lanka. Life would have been hell. No internet, no petrol, no fuel. So inflation situation, notes, bundle of notes.
Sir, one time we have 10,000 note also, no? And 5,000 note. So maybe in 1975 something.
हाँ, तो ये देखो, ये ब्रेड लेने के लिए भी कोई बंदा जाए था ना, और मुझे फोटो दिख जाए तो क्या? In Zimbabwe, bread cost Zimbabwe $10 million. So you try to understand, in order to buy one packet of bread, this lady is carrying so much of bundle of notes. Right? That was the situation one day. So maybe if this could have been the situation in India, obviously, then in that case, Britannia will have to send a truckload of money to pay 3 crore 60 lakh. But right now we are fortunate that is not the scenario. So, but yes, if inflation goes, hyperinflation, 10 countries where a loaf of bread cost a bucket full of cash. This lady is trying to buy one loaf of bread. See how much cash they have to pay for that. And that will serve only one day hunger. This guy, look at him. That's the irony of inflation, guys. Hyperinflation can kill you.
Sir, they won't even they when they feel cold they really don't burn woods. They really burn their notes only.
Yeah, so notes are so cheaper than wood, right?
If you give, I read somewhere, if you give $10 to them, they will come to your home to drop their notes. Like they have so much of notes to drop at your place.
That's the problem, right? So we are not in that situation, fortunately, that we have to, that Britannia will have to send a truckload of money to get a truckload of wheat. But yeah, so on this day, 30th September, what will happen? What happens with the price of the wheat? Britannia Industry Limited will pay 3 crore 60 lakh rupees to ITC Farmland, and ITC Farmland will deliver the underlying asset, which is a particular grade of wheat to the quantity of 10 lakh kgs to Britannia Industry Limited in their Nagpur location, right? What happens? Because they had settled for what? Physical settlement, right? Still, if you want to see who is benefited in this trade, you can say you have to look at just to find out who benefited in this trade, you have to look at what? Spot price of 30th September, right? So let's look at the spot price of 30th September. What is the spot price of 30th September? 1 kg of gold. Sorry, 1 kg of wheat.
30.
30, right? So who is benefited in this trade by entering into this forward contract?
ITC.
Why?
Because they sold the 36 rupees per kg.
Yeah.
Yes, naturally.
Sorry, you said what? But I guess I couldn't hear you properly. What did you say? Britannia Industries Limited is benefited or ITC? Which one? Which one is benefited in this trade?
ITC.
ITC farm.
And why? And why?
Because they sold the 36 rupees per kg at that time in July.
So they got 6 rupees per kg more than the current market price of that days of wheat, right?
Right, sir.
But do you think Britannia Industry Limited is at disadvantage in this trade?
Both
No,
times
because for them,
call customer triangle.
Sujata, this is, please go on mute. Yes, Neil, you were saying something.
because for them,
Yeah,
anyways,
for
they
the
have
first answer is Britannia Industry Limited is unfair or disadvantaged or compromised in this
no,
transaction.
no,
Why? Why?
because at the time of entering the contract itself, they have given a price in such a way that their profit is taken into consideration.
Right. So at the price of 36, they would have kept their profit, their business profit into consideration, right? So,
Right.
and you need to compare, emotionally, the people of Britannia Industry Limited would have, by locking up this price 3 months back, would have had 3 months of good sleep, right? Which
Yes,
Nivedita is feeling right now, sleepy, but that is what Britannia Industry Limited would have had good sleep, right?
right.
So that is something which is powerful. And second, who knew that after 3 months, what will happen to the prices? So as a management, as a good prudent management, you have to take decision by entering into a hedging position and fixing your price, because that is always better than really betting on, because you are not a trader who can bet on the view of the prices and take speculation bets, right? You are a business person. You have many more other things to worry about. You have to worry about your employees. Are you getting good employees or not? You have to worry about hiring. You have to worry about raising capital. You have to worry about your investors who have invested in the stock market in your companies. You have to answer to them. You have to worry about buying machineries. You have to worry about buying land. You have to worry about building more distributor network. So there are so many things you have to worry on business front. Why to add one more worry? So from that perspective, Nehal, you are completely correct. They would anyways would have kept 36 rupees. They would have entered into this contract at 36 rupees, because at 36 rupees, they would have been making good profit any which ways. Right?
Right.
Right. So from that perspective, yes, you're correct. Anyone disagrees with it? Anyone disagrees with it and says that no, still Britannia Industry people are full people and they shouldn't have done this transaction, and no one in the world is more fool than Britannia Industry people. Is anyone else who thinks like that? Huh? No, right? So both have protected their downside risk, and because they belong to the hedger community, as such, they are not losing anything by entering into it because it's a business usual. By fixing the price, you can bring certainty to your business. By not fixing the price, and try to understand this is everyday's decision. Today you got a big order, you book this forward contract. Tomorrow you will get even more bigger contract, and then you will enter into a forward contract with some other company for some other contract, and there you might be benefited. So this will keep going on. But try to understand certainty is the will come at a price. Always will it come at a price. So you can and you try to understand. Warren Buffett का एक friend है जो कि उनका partner है, उसका नाम क्या है? Charlie Munger. Charlie Munger says that you should try to if you want to prove anything, you try to prove it with bringing thoughts from multiple disciplines. And there's a book written on it, Investing, the Last Liberal Art, right? In which it is said that if you are making any decision, think of multiple disciplines, and every discipline takes you to the same conclusion. Then you are logical thinking. So think it from that perspective of certainty. Then when I say that certainty comes at a cost, think it like this. If you are going on a trip and you want certainty, will it be expensive as compared to when you are going on a trip without any planning? जा इच्छा हुआ, हाथ आगे किया, लिफ्ट मांगी, ट्रक में बैठे, बस में बैठे, कैसे भी चले गए. As compared to when you go on a planned trip, you pre-book everything. That hotel, this hotel, that. It will always be car from point A to point B. You fix everything. It will always be expensive than a budget trip which you do without any such plan. You just go by whatever vehicle means available. Most of the times you travel free because you take lifts in an unplanned manner. So certainty comes at a cost, which is upfront. For booking everything, you'll have to pay out everything upfront, maybe a percentage of everything upfront. And that is from the discipline of traveling. And this is the discipline of buying. Here, buying raw materials. Here also certainty is coming at a cost. The cost is that you may miss upside. That is a cost. You will protect your downside, but you may miss upside. That is fine. That is fine.
Sumit,
They are okay with it. Yeah.
one question. Why it's not talking about collateral here in this setup?
So because both the companies are, you can understand, AAA plus rated.
Okay.
I missed on this point, but both the companies are AAA plus rated, and this is not a contract between Kingfisher, Vijay Mallya, and Britannia.
Yeah.
Right. Even if Kingfisher would have been AAA rated, but seeing Vijay Mallya, Britannia would have definitely asked for collateral. But still in this case also, they can ask for collateral if that happens, because both are AAA rated. Nobody would agree to give collateral to another party and without receiving another collateral from the same party. So for example, Britannia will not be agreeing to give collateral to ITC, where ITC do not give collateral to Britannia, because both are equals. So the best in this case, if both wants to go to through the route of collateral, if there's a trust issue, then they will have to appoint a custodian. And rather than making a bilateral forward contract, they will have to make a tri-party forward contract, where the third-party custodian will not play any major decision-making role. They will just hold the collateral. They will the third-party custodian will collect collateral from both the parties. Whosoever will default, their collateral will be given to the person, to the other party, basically.
Okay. Thank you, Sumit.
Satyak, you have any question to ask, because you were unmuted for a long time, but there's a lot of background noise coming out from there. See, everyone other than Nivedita, Rahul, and Nehal. Everyone other than you three people, everyone has gone for that mode, non-camera mode. What do you call it? No video mode. You know, everyone thinks that कोई observe नहीं कर रहा है, video बंद करो, आराम करो. So that is great, Nivedita. I'm really happy that you stood right and Ayush is suddenly again on her camera, and so is Shashank and so is Shurvi. We are seeing Ritvika, everyone is again starting. Oh, Kamesh, your background, Kamesh, is awesome. Where are you sitting? Are you sitting in what, some other planet or
Sitting
what?
at home,
In
sir, at home,
universe?
sir.
It looks like you are sitting in some universe. Awesome background. And okay, now suddenly we have few more participants ready. I'm just going through all of you. Ramesh is driving, it seems, or is traveling, as he said. And okay, I'll just, I'm just getting it recorded. I'm just going through your profile so that everything gets recorded. So if anybody is observing, he or she will see, okay, yeah, enough cameras will open in the lecture. You guys can go off the camera if you want to go. Whenever you switch off the camera for some reason, you can do it. And Nivedita, whenever you feel like sleeping and taking a nap for 10 minutes, you can do it, right? But it's okay if you do it from my side, right? But actually, the place where you are sitting now, it is so cozy that anybody will feel like, because the chair is looking so cozy to me, like it's very comfortable chair. So you feel you may get sleepy in that chair. So yeah, it can happen, but it's okay. Good, cool. So out of this light commentary, again, let's go back to this. Now, so one point I never touched even yesterday was that though it is important that this transaction happen with a physical settlement, though it is important, but it is not mandatory. Try to understand what Britannia's challenge is not to arrange 10 lakh kgs of wheat. What Britannia's challenge is to get that much of cash, in case if they go downside risk, if there's any downside risk, they get that much of cash in difference. What I'm trying to say is, you will get clear over here, that for example, if this whole transaction would have been cash settlement basis, if this whole transaction would have been a cash settlement basis, what would have been the case? Tell me. First, in order to have a cash settlement transaction to be settled, you need to look at the spot price of that day, the settlement day. Settlement day spot price is 30. So by looking at the spot price of settlement day, you compare it with the settlement price decided as per the contract, you can find out who is the losing party and who is the gaining party, right? So in this, who is the gaining party? ITC, right? ITC, right? Gaining party, you all said, is ITC, right? And who is the losing party? Britannia. Now, after identifying the losing party and the gaining party, what you need to identify is what is the quantum of the loss or the quantum of the gain, right? The quantum of the loss or the gain, whatever you say, is 6 rupees per kg multiplied by 10 lakh kgs, right? Right? So total quantum loss gain is what? 60 lakh rupees. So Britannia Limited, Industry Limited will transfer 60 lakh rupees to ITC Farms Limited. That is how this transaction will be cash settled, yes or no? Come on. If this transaction would have been cash settled, by transferring 60 lakh rupees from Britannia to ITC, would have settled this transaction, yes or no?
Yes.
This transaction would have been settled, right? Now you can ask, but still the problem of Britannia is not solved. You will say Britannia wanted 10 lakh kgs of wheat. Where is 10 lakh kgs of wheat? So for that, the answer is very simple. Britannia can buy the 10 lakh kgs of wheat on that day's spot price, right? At 30 rupees. But by entering into this transaction, Britannia kept the cost kept the cost capped at 3.6 crore. Yes or no? Because Britannia will buy the same kg of wheat physically in the spot market at 3 crore rupees now. right? Because the spot price is 30 rupees on 30th September. Britannia physically needs wheat, right? It needs wheat. Physically, it needs wheat because it has to start manufacturing the order which it has received for so much a big order, right? Of biscuits or whatever, right? So it will buy the wheat on that spot day at a spot price, 30 rupees. So it will have to spend 3 crore. But the total cost for Britannia remain what? 3 crore rupees of wheat and 60 lakh rupees paid as a loss of the transaction in cash settlement. So the price remain capped at 3.6 crore. Yes or no? For ITC farm also the price remain capped at 3.6 crore. Overall price will remain capped at 3.6 crore. How? ITC will be able to sell because, for example, if this is a cash settlement, but still ITC sitting on a production of 10 lakh kgs, it has to somewhere sell it, right? If it is not selling it to Britannia as part of physical settlement, it will have to settle in the common open market. In open market, if it settles, it will be able to receive only 3 crore rupees, right? So you'll say, oh, no, it is making a loss. No, it is not making any loss. Why? Because the balance 60 lakh rupees, which it will receive from Britannia as a part of getting a benefit as per this cash settlement transaction. So ultimately for Britannia, the cost remains 3.6 crore, and for ITC, the revenue remains 3.6 crore. Ultimate revenue remains 3.6 crore. For Britannia, ultimate cost remains 3.6 crore. So even if they go for cash settlement, whatever price they have decided would be kept same, and the final realization would be equal to the price of settlement. If, for example, the spot price would have been 38 or 40, let's make it round figure 40. In this case, Britannia, and 40 rupees is the spot price, and the entire all the things same, but settlement is cash. Then in that case, Britannia had to buy 10 lakh kgs, whatever, wheat. So it has to buy it from market because it has not entered into a physical settlement contract. So it will buy in the market on 30th September. It will get it at what price? 4 crore rupees, right? So you'll say, okay, Britannia, the realization for Britannia's cost is 4 crore rupees. It is higher than what they thought, but still try to understand. Though they will have to pay 4 crore rupees in the open market, but they will receive 14 lakh rupees of profit from ITC because of this cash settlement contract. Because if the spot price is 40, the gaining party will become Britannia, and the losing party will become ITC. And ITC will have to transfer 4 rupees into 10 lakh kgs of wheat to Britannia. Yes or no? So on the one hand, Britannia will be paying 4 crore rupees in the market, but will be receiving 40 lakh rupees from ITC. So the net cost will remain 3.6 crore. Similarly, at this price of 40, you will say, okay, ITC is getting 4 crore rupees from the market because ITC will be then selling its wheat in the open market at 40 rupees because that day open market price is 40 rupees. So it will realize 4 crore rupees of revenue. So say, okay, ITC is getting more than what they expected. But still, no, they're not getting more than what they expected. They're receiving 4 crore rupees for selling their produce, but at the same time, they will have to pay 40 lakh rupees to Britannia. So for them also, the net cost will remain 3.6 crore. So come what happens, whatever price has been settled, even if it's physical settlement or cash settlement, whatever price has been discussed or agreed upon will remain their final realized price. So that is one aspect which I didn't touch upon. But yes, on the top of it, there can be certain costs which are there, which we haven't discussed in any of the examples, but that cost can be transaction cost, because by entering into this, there can be transaction cost, there can be brokerage. So those costs can be there. and which we for the time being can assume to be 0. But no, you cannot ignore them. For example, if ITC has been using the services of a broker to find out Britannia, so ITC will have to pay a small amount of fee to broker for finding Britannia and getting helping ITC to get into this contract. And also there is a transportation cost involved into this transaction. If it is a cash settlement oriented transaction, then though Britannia would ultimately, the purchase price for Britannia will remain 3.6 crore, but it can get escalated by the value of transportation cost if it has to incur transportation cost on its own. Right? So there can be a little bit transaction cost here and there could be there, but beyond transaction cost, it will not escalate based on the price of the wheat at least. Yeah. Is it clear?
Yes, sir.
Any question, guys? Anyone? Anyone has any question? So I hope, yes, Surbi, you want to ask a question? Sorry? Sorry?
So far good. I didn't have
So
any
far,
questions.
okay, yeah, okay, so far. Anyone? All right. Okay. So these were some examples I discussed about forward contract. It would help you understand forward contract to a large extent. I agree. Sorry, I believe you need to agree that, but I believe, and you need to go through them when you get time. And if you remain so cozy, Nivedita, over there, you will never get time. So you need to bring time to study these, right? Rahul, you need to spend time for your own study because it's really fun when you spend time with your dog, and sometimes you do not feel like doing anything else when you are spending time with your pet. And so every break which I take, every break which I take over here, and I feel like taking a lot of breaks. Every break I take, I simply go to my daughter, even if she's sleeping, because most of the time she's sleeping. She's just very young, right? But most of the time she's sleeping. So even if she's sleeping, I'll just go and sleep by her side. But I want to spend every 1 second which I get in my life for free, when I should be reading something or doing something which I used to do before her. I just do not do any of those things, and I spend. So yesterday morning I woke up at So every day I woke up at 4, right? You guys know. So I woke up at 4. I went up. I came up. So my daughter sleeps in the room in the base. In the ground floor. So I came up on the first floor. In my room, I started reading. From 4 o'clock to 5:30, I kept on reading. So I read till from 4 to 6:30, but I kept 5:30. I went down. I thought I'll just see her once and then come back. I went down, and she was awake that time, and she was very playful. So I just started playing with her, and from 5:30 to 6:30, I don't know how time flight. And फिर देखा घड़ी तो 6:30 बज गया and need to go to workout. Oh, I just then so the time goes with her. The time goes like the flies like anything. So I understand, Rahul. Still you bring out some time for your own study because you guys have taken this. Few of you are doing only for understanding this, which might help you in your present job. Maybe like for Nehal, people like Lewis or Prasad. It is just going to help them in their present job which they are doing. But few of you might be doing it to enhance your career and maybe take up a career into investment banking. A lot of you, in fact. Louis, Prasad, Neil are few exceptions, which I happen to meet in every session. There are always 3 to 4 people like them who only come to understand them. So even if they do not study well, even if they do not attend any interviews, I don't think they would be very worried because they would not be really worrying about marks or anything. But there are people, many of you would be really looking to take up a career into this. And those who are really looking to take up a career into this, I would just urge them that fun apart, everything else apart, you have not got any scholarship. I'm sure Imaticus do not give any scholarship. So you have paid hefty amount for this course, because they pay me hefty amount to take these trainings. So that's why I knew that they charge a hefty amount to you. So please respect that, study and go through all the video session whenever you get time. In fact, you should make time. If you're not getting time, then you should make time for going through that. And also the content which is there on your LMS portal. Because all what I'm studying over here, maybe it's a drop in the ocean. So the ocean is waiting for you in the LMS portal, right? So you need to go through that also along with our trainings. That is how it will make sense to you and an overall understanding of you. It is very important for you, for those who really looking to make a career. So I can understand, like seeing Kamesh being so young, I can understand he's not here just to understand this, but he's somewhere looking to make a full-time career into this. Because your young face reminds me my youth, right? I'm still young, I'm 32, but right. So a lot of you are really trying to make a career into this. So please, study, make out time for it, and plan for it, and study all of this, because it's very important that you study this. Otherwise, when I'm explaining it, everything will look like, okay, तो बहुत easy है. लोग तो बोलते थे derivative बहुत tough है, derivative में ये है, derivative में वो है, derivative में ऐसा है, derivative is so tough, derivative is difficult to understand. And all of them are correct, I'm telling you. Even if you would feel that right now that, okay, this is so easy, but actually in real time, it might not be so easy if you are not in touch with it. Those who are in touch with it, for example, the actor of the movie Zindagi Naha Milegi Dobara, Hrithik Roshan is doing the same thing, booking the trades in the morning and closing the trades and making a hell lot of money and becoming rich. But those who are in touch with it can really do it and find it very easy to use their fingers on laptop and just book and make crores and crores of rupees. But it might not be easy for those who are not in touch of it. So please stay in touch of it, make use of it. That is how it will make career for you. Otherwise, it will be just one more attempt on which you failed. But in my life, I have failed in many attempts, in many places. So like this, if somebody comes and tell me that, okay, hey, Sumit, I have never failed in my life, I can respect you for that. But I would also say you are lucky. You are one of those few crores, one of very few of those out of crores and crores of people who are lucky, who are born lucky, right? So please focus on your studies also. Make groups. Now, after having so many sessions, you might started interacting with people, in your group. You might be now the videos are also on, so you can look and see each other also. So try to make groups, right? And discuss among your group. Maybe, every once in a week or twice in a week, meet in your group and discuss these things which we are discussing in the session, right? It would enhance your communication skills and your domain skills. Both ways, it is going to help you, right? So it's very important that you stay focused on what you have paid for. Very important, guys. Chalo. I will not give much gyan on it, because then you will feel like drowsy and sleepy, but still, that is important from time to time, because Nehal was already doing like this. She was okay. All right. Yeah. All right. Yeah, cool. So that is what all forward contract about, guys. Just to briefly close it, let's look at some of the things which we have done about the forward contract. By nature, it is an OTC contract, which is a privately negotiated contract, and that is why it offers a lot of customization. I can also name it flexibility. Well, two parties can agree on whatever terms they want to agree on, and nobody would say anything, and nobody is going to demand anything on them. These two parties, whatever they agree on, is their choice, right? In terms of underlying asset, they can agree upon what quantity, what quality, date of settlement, place of settlement, time of settlement, margin, if any margin is to be taken, price at which the transaction will happen. So all of these can be customized as per the requirement and agreement of both the parties. these contracts carries a lot of counterparty risk, especially in case of bilateral settlement. But some counterparty risk can be reduced by entering into a tri-party contract, wherein you bring a custodian in between and give him the responsibility to collect collateral from both the parties. Or maybe in a bilateral settlement also, a lot of time risk can be reduced, counterparty risk can be reduced by entering into a contract with a dealer, which is an investment bank, right? Because investment bank would not generally default on what they have promised as part of the contract one, and investment bank will take collateral from you. So investment bank will also be happy because they are collecting collateral from you, and you are happy because you are dealing with investment bank who do not have any past track record of defaulting, or in fact, saying other ways, who generally do not default on anything. 99.9% they do not default on what they promised. In forward contract, brokers may be involved, may not be involved. It is not compulsory, right? So that is why brokerage commission, you as a party to the contract may have to pay brokerage commission or may not have to pay brokerage commission. Both the parties remain under obligation when they are entering into a forward contract. So forward contracts obligates both the parties. One has the obligation to buy, second has the obligation to sell, but the obligation remains on the shoulders of both the parties. Both, that is forward contract buyer and forward contract seller. Forward contract buyer is having a long position, forward contract seller is having a short position. Forward contract can be used for hedging, speculation, or arbitrage purpose, right? We have seen in the first example, both the parties were speculators. In a second example, both the parties were hedgers, right? So this is all about forward contract. Any questions before we move to future contract? No questions. Okay. ठीक है. So here comes the futures. Now futures is exactly same as forwards in most of the things. So whatever we have studied in forwards, the same will be there in the futures. The only difference is with respect to the number of parties involved and the place of transaction. Unlike a forward, future is a exchange traded derivatives. And when an exchange come into picture, you know, a lot of things come together with it. One, the contracts will not be customized. The contracts will be fixed as per the rules and regulations of the exchange. Exchange will determine everything about the contract other than price. And we'll talk about it, why not price. Because price will be dependent on market demand and supply, because trading happens on exchange. Liquidity increase of the contract when it is on exchange traded. When exchange comes, with it, regulation comes. Counterparty risk go down to zero. When exchange comes, margin becomes compulsory. Both the parties will have to put collateral on the name of margins to exchange. When exchange comes, broker becomes mandatory. You have to have brokers as a part of the deal. When exchange comes, anonymity comes. Counterparties do not know each other. The buyer doesn't know who is the seller, and seller doesn't know who is the buyer. The broker of the buyer doesn't know who is the broker of the seller. The broker of the seller doesn't know who is the broker of the buyer. Exchange knows everything, but exchange do not divulge this information to everyone. Exchange is God. In an exchange traded transaction, exchange is God. And all of this come at a cost of customization. Exchange may you will not get options. I'm not talking about the option of derivatives. I'm talking about option in the terms of date of expiry or date of settlement. You will not get it. If you want to go for 10 years of options, 10 year of forward contract, you can go in OTC market. But in future contract, you will not get that option of having 10 years of tenure. But exchange gives all other benefits. It reduces the counterparty risk. It enhances the liquidity. It enhances that very important thing, transparency. All the price and volume data are in front of you. You know at what price things are getting sold and bought. You don't know who is buying and who is selling. That is fine. But you know at what price things are getting sold. Because anyways, you are interested into underlying asset, right? If I want to buy gold, does it matter Nirav Modi is selling me, or Nivedita is selling me, or Yash Kenya is selling me? Doesn't matter. I want to buy gold as far as the quality of gold is what I want. If I want 18 karat gold and Nivedita is selling me 18 karat gold, Yash Kenya is selling me at 18 karat gold, and both are selling at the market price. Doesn't matter to me who is seller. What matters to me is price and volume. That if I want to buy 10 kg gold and if I want to buy 100 gram gold, what is the respective price for each of these? I want to know that data. That data is transparently available on exchange. Every second's data is available on exchange. So everything comes at a cost, and the cost is lack of customization. You cannot customize. And that is why contracts, futures contracts on an exchange are highly standardized. And that is why complex derivatives cannot be traded on exchange. And that is why investment bank is there. Investment banks are there because they play an important role of dealer in an OTC market. More than 80% of the transaction on derivative markets happen in OTC market. Right.
Can you give an example where investment banker is acting as dealer in this setup once we are done with it?
In this setup, the investment banker will not act as a dealer. In this setup, the investment bank will act as a broker.
Broker only.
In exchange traded market, investment banker will be trading as broker only. In OTC market, investment bank will deal as a trader. Sorry, dealer. OTC market.
And here the type of settlement will always be physical and not cash.
Well, here, what you say, forwards or futures?
For future.
Futures type of settlement, 99% will be cash. Future transaction, I have written it physical, maybe because of one example. But 99% of that trade will be settling in futures. Maybe 99% is very big amount, but 90% of the trades are settling in cash.
Okay. Thank you, Smith.
When it is exchange trade. With respect to electronic assets, for example, shares and all are electronic assets. So their physical transferability is possible. But with respect to commodities and all, exchange will not get into that nakhras of traders कि उसको काम माल को क्या रखना है. अभी मेरे को 50 kg गोल्ड चाहिए फिजिकल. एक्सचेंज नहीं देगा. एक्सचेंज का खर्चा बढ़ जाएगा ना. 50 किलो गोल्ड रखने के लिए in order to store 50 kg of gold, try to understand what kind of security you need. People will kill each other for 50 kg of gold.
It
But
will be
exchange
another
cannot take
money heist.
And exchange cannot take that risk, right?
Yeah.
Exchange cannot that because exchange ka reputation is at risk. Because when we say कि exchange पे trade किया है, मतलब counterparty risk zero है. अभी gold ही गायब हो गया तो exchange कहाँ से लेके आएगा अपने को? So most of the trade on exchange will happen in cash. Very limited trades will happen on physical. Right. And brokers, investment bankers would be acting as a brokers only, no dealer. Exchange himself is a dealer. Exchange का deal चल रहा है, अब exchange सबको खिला रहा है. Dealer कौन होता है जो खेल खिलाता है, right? वो हम जाते हैं ना. I have never been to.
In the movies they saw. Sure.
But my friend used to be a very big poker trader. He still is a very big poker trader. So वो dealer बनता था poker के game में. कुछ तो game खेलता था वो. I forgot. Or with I forgot. But yeah, dealer is the person who make people play, right?
Yes.
So exchange is help letting people play. So यहाँ पर investment bank का role नहीं है. ये exchange की जाने की वजह से ये चला जाता है तो ये हीरो बन जाता है OTC मार्केट में. Because exchange नहीं है इसलिए OTC मार्केट में investment bank plays a very vital role. अब ये आ गया है. So जैसे बाप बाप होता है, right? तो exchange आ गया है. So their role is now subdued to just being a broker, right? हाँ, कोई कुछ anybody was asking something? Somebody was asking something? Was anyone? ठीक है, चलेगा. Now look at this example. So most of the things, the utility of futures and forwards is same. The utility of futures and forwards is same, but you will find that speculation will be higher in case of futures because a lot of people do only trade on exchange. It becomes easier on your mobile phone to do it, right? Trading. Forward में you'll have to search the other party. बाहर निकलना पड़ेगा, लोगों से बात करना पड़ेगा. यहाँ पे it's very easy, right? Mobile cut. I sold 10 lots today. Bought it by the end of the day. Earn 1 lakh rupees. Make a video, put it on Instagram. 10 lakh followers. Right? That is how easy it is on exchange traded for futures. It's easy. So most of the people are here for speculation purpose. But that doesn't mean that everyone is for speculation purpose. Because there is no counterparty risk, and if standardized contract is serving the purpose, even Britannia would like to do a future contract, being a hedger. Because companies like Britannia do not want to have that headache. After 3 months, if the opposite party just defaults, my business will be halted. Sorry, not halted. My business will be at halt, right? So even Britannia would love to do this. If NYSE's any of the standards product or exchange any of the standards product meet the purpose of Britannia. Britannia wants 8.5 month ka contract, but exchange is giving it 6 month ka contract. Nahi chalegi. But can Britannia negotiate with exchange? Make it 8.5 months. Exchange will say, I don't care. You are Britannia or president of US. My products are my products. You want it, you take it. You don't want it, you go to hell. I don't care. So that is why then Britannia will have to go to forward market, OTC market, to find out someone with whom customized deal can happen. But then there is counterparty risk over there, right? So look at this example. KKR hedge fund is bullish on the shares of IBM. KKR hedge fund think that the prices of IBM shares will go up like rocket. KKR hedge fund thinks so, right? Bullish on shares of IBM. They go with a long position in IBM equity future, right? Why? Because they're bullish, so they would like to buy, right? trade date is of July and 5th July. What is the trade date? 5th July. 10 a.m. 5th July, 10 a.m. KKR hedge fund. So hedge funds are managed by fund managers. Hedge funds are managed by whom?
Fund managers.
Fund managers. Hedge funds are managed by fund managers. Mutual funds are managed by fund managers. Right? So the fund managers of KKR hedge fund would have got Lord Krishna in his dream morning, right? And Lord Krishna would have told the fund manager, Mr. Subramaniam, that, hey, Subramaniam, tomorrow when market opens, put all you have on IBM shares, right? The Subramaniam hedge funds have crores and crores of rupees. Hedge funds do not deal with individual investors like Sumitrati, Surbhi or Yash. Hedge fund deals with only with accredited investors like HNIs and institutions. So hedge funds would have clients like Mukesh Ambani and Adani's. So hedge funds would always have a huge amount of cash lying in their account. Subramaniam is managing it. So Subramaniam gets a call from Lord Krishna. IBM shares are going to go like rocket. Put everything you have. Subramaniam go to the office in the morning, 8:30. Check with the treasury team, how much cash do we have? Treasury team says we have 100,000 crore rupees. Zyada ho gaya. 1,000 crore rupees. Subramaniam can say, okay, put 50% of this cash, that 500 crore cash, in taking a long position in IBM equity futures on NYSE. Put all you have. Right? There's a problem. To buy 500 crore rupees of shares, the problem is, to buy 500 crore rupees of shares in cash market, you will have to pay 500 crore rupees. But to buy 500 crore rupees worth of shares in F&O market, you will have to pay only a small margin money. If the margin percentage is maybe 5%, then to take a position worth 500 crore rupees, you have to only pay 25 crore rupees. F&O trade gives you opportunity to have leveraged bet. Look at it. If I want to buy shares worth of 500 crore rupees in cash market, I will have to pay 500 crore rupees. But if I want to trade for the exposure of 500 crore rupees, but don't want to pay 500 crore rupees, I can use F&O. I go to F&O, that is futures and options market of exchange, take an exposure of 500 crore rupees worth of share by paying only 5% margin money. So to have an exposure of 500 crore rupees worth of shares, I just have to take out how much money? 25 crores. That's all. Put 25 crore rupees worth of margin money with exchange. In fact, you will not keep it with your exchange. You will keep it with your broker, and your broker will keep with exchange, right? So put 25 crore rupees with your broker. Broker will keep it with exchange, and you have the exposure towards 500 crore rupees worth of shares. And the funny part is, Surbhi, that no one owns this 500 crore rupees of shares actually in their account. So you want to having a buying position, somebody is having a selling position. So Surbhi, if I ask you that tomorrow go and sell iPhone, what will you have to carry with you to sell iPhone? I tell you that go to market and meet Yash Kania and sell iPhone. Tell me, while you are leaving your house tomorrow morning to meet Yash Kania, what you will have to carry with you? What is that one thing you will have to definitely carry with you?
Phone.
iPhone. To sell iPhone, Surbhi will have to carry iPhone. Then only the transaction can happen, right? Here, the seller do not have to carry 500 crore rupees worth of shares with him to enter into a transaction to sell those shares. Buying and selling is going on in a cash market. Here in F&O market, fun is going on. Somebody is saying, I will buy 500 crore rupees worth of shares. Somebody is saying, I will sell 500 crore rupees worth of shares. Both are entering into the transaction. After 1 month, both are settling their transaction only with respect to the difference of amount. Nobody is bringing out 500 crore rupees of his pocket, or nobody is bringing out 500 crore rupees of securities out of his pocket, because the buyer doesn't have 500 crore rupees in his pocket. The seller doesn't have 500 crore rupees worth of securities in his pocket. But both are entering into a transaction. And that transaction will be settled at a very minuscule level of the profit and loss, right? So that is why F&O transaction enhances the trading on any stock to a huge level. I will show you an example. What I'm saying when I say that trading volume, I'm talking about trading volume. What is trading volume? So when you look at any stock price, when you look at stock, for example, Reliance Industries Limited, you will get a data called trading volume, daily trading volume. So what does it mean is, on Friday, 49,57,000 shares were traded on exchange for Reliance. Okay. So volume means what? How many shares got exchanged on the market, right? Okay, just give me a second. Sorry guys, my wife was at the door and I had to attend her. Okay, so I was telling you that the volume is 49,57,000, right? So volume means what? That how many shares are traded on stock exchange. Now what futures market can do is, it can enhance the volume unnecessarily. Because as I told you, in futures market, you do not have to have the shares or you do not have to actually exchange those numbers of shares. So you can trade in any number of shares you want on any stock. Suddenly the volume of that would increase. And that is why F&O provides something called as liquidity. Because volume increases, trading increases, liquidity increases. But it also enhances then the volatility. Because if a lot of trading happens throughout the day, prices will keep fluctuating like this. So volatility will also increase. But liquidity is the biggest benefit, because those stocks which suffer liquidity, which are not traded on F&O market, Reliance is traded on F&O market, so the volume will always be bigger. But there are many stocks which are not traded in F&O market. And those stocks which are not traded on F&O market, you will find their volume. So for example, let me take an example, then you will understand. Their volume is going to be very low. So there's this stock, Cineline. So it's a very small stock. See, what is the volume? Only 1 lakh shares. Right. कहाँ पर 50 lakh shares in a day getting traded, exchanging hands? कहाँ पे 1 lakh shares exchanging hands? So what happens is that if somebody even sells 2,000 shares, if even somebody sells 2,000 shares, the price of the stock will fall like drastically, because the volume which traded over here is very low. So suddenly if somebody wants to buy 10,000 stock, see, the price of this stock is very minuscule. What is the price? 132 rupees. So even if you want to buy 10,000 stock, it is just a matter of 13 lakh rupees. And there are many investors who can have those kind of money in stock market. Many investors in crores who can have the wherewithal to buy some stock of 15 lakh rupees. But if somebody put an order of buying 10,000 shares on the stock market, you will find the share price jumping from 130 to maybe 160, 190 immediately. Because it would enhance the demand drastically. And suddenly the price will go up. On the other hand, if somebody wants to sell 10,000 shares, he puts an order, she puts an order to sell 10,000 shares, suddenly price will drop 20%, 15% immediately. So liquidity is a big challenge. What price you are seeing on the screen might not be the price you would realize when at the time of when you are selling your share. If you are selling bulk stocks, there's a big challenge in small cap companies like Cineline. Right? So volume creates a lot of problems. So F&O, the stocks which are traded in F&O, the volumes increases drastically, and most of that volume is fictitious volume, but whatever it is, it increases drastically, and that is why even such large orders do not impact or dent the price movement of extreme level. Right? Though they remain volatile through the day, but they will not go extreme suddenly, all of a sudden. Now, if you look at ITC, see volume, 69 lakh shares are traded. Right? If you see 20-day average volume, it is 1 crore 22 lakh shares. Average volume. Maybe on Saturdays, lesser number of shares are traded. Or on an average in the last 20 days, on an average, 1 crore 22 lakh rupees, 22 lakh shares were traded on daily basis.
So what is this market cap over here? Right side?
Market cap is the number of shares
Into price?
available for trading into price per share. So the price of this company is what per share?
Okay,
300. Number of shares, if you multiply the number of shares which are available in the for this company in total in the universe,
okay,
you multiply it with that, you will get the market cap.
okay. Thank
So
you.
market cap of the company, if you want to buy the full company, if you want to buy the company and become 100% owner of it, what you have to spend is 3,87,773 crore rupees. Mind it, this value is in crore.
Correct.
So if you want to become 100% owner of ITC, you have to spend 3,87,773 crore rupees. Right? That is what is market cap.
Okay.
Similarly, Senior Line, if you want to become owner, you don't have to spend that much of cash. It will come very cheap to you. I'll show you as compared to ITC.
300 was there.
Unit was there, so only 300 crore rupees company. It's a small
Yeah.
company, right?
Thank you.
Reliance would be even bigger. 70,71,281 crore. Right? Senior Line is baby company, 419 crore. Right? So you have to spend 419 crore to become the owner of this company, 100%. So these are some things about F&Os. Now let's look at this example, and then I will take you through again through the money control F&O section. In money control, we have F&O section also. Market. Okay, where is F&O? This is F&O. F&O is nothing but futures and options, derivatives. Futures for all the stocks for which future options are available, futures are available, are noted down over here. If you want to take position in any of this stock to buy in future or to sell in future, you can choose the stock, for example, Amaraja Battery or Polo Tire. So only 3 options are available. So that is what customization is all about. Standardization is all about. See, if you want to trade in the futures of Apollo tires, only 3 future dates are available. 29th September, that is 1 month future. 27th October, that is 2 month future, and 24th November, that is 3 month futures. But if you want to take the position with 6 month view, you can't take it because the exchange is not giving you some option like that. So you have to then explore forward market only. So they're basically OTC market only, right? For example, you select 1 month expiry date. So you'll get this information. So what is the price per share in F&O futures market? 247. What is the price? 247. Right? And if you want to invest into futures of this company, if you want to enter into a futures contract of Apollo Tire, minimum number of shares you will have to buy will be market law, 3,500 shares. You will have to enter into buying futures contract of buying 3,500 shares. So if you want to enter into a futures contract of buying 1,000 shares, the option that facility is not provided by this exchange. So minimum you will have to buy 3,500, and then in the multiples of 3,500. So you can buy 3,500, 7,000, and 10,500 like that. So that is also decided by this what is it? Exchange, right? And the spot market price for this is 245. Futures market price is 247. So we know the difference. This is 1 month futures price, right? The difference is because of carrying cost and the view on the price movement of the company in future. Right. So they are traded. So right now the market is closed. Otherwise, you would have found that this would have kept on increasing, going up, going down, going up, going down every second. They're traded every second. Futures are traded every second in the market. Just open it when market opens on Monday. Between timings, you will find that this keeps on changing. Right. Numbers of contract traded throughout the day on Friday was 1088. Right. And so now let's come back to this. Yeah. KKR hedge fund has a bullish view on IBM shares, so it wants to enter into a long-term contract of 1 month. So August future, it can buy August future if it has 1 month view, right? It wants to buy futures, then it will have to go through the route of exchange. So if it wants to buy futures, it needs to appoint a broker. So KKR hedge fund will appoint a broker, Goldman Sachs, and will tell that I want to take a long position into IBM equity share futures with 1 month expiry. With 1 month expiry, right? Then broker will go and put this order over here, bid order, where on NYC. That hey, I want to buy 1 lot of IBM equity shares at a price of 222. That is the price who will quote? Broker will quote in open market on exchange. On the other hand, Fidelity Mutual Fund wants to sell IBM shares. Why? Because they might have what? Bearish view. They might have what?
Bearish view.
They think that in 1 month time, the price of IBM shares should fall. That is their view. So they want to sell IBM shares, right? They will not go directly to NYSE. NYSE is an exchange. They will not go to NYSE. They will have to go to whom? Their broker. They will have to appoint a broker. They will say to broker, hey, JPMC, we are having a bearish view with 1 month time period. So we want into a future contract, enter into a future contract, take a short position on futures on exchange for 1,000 or for whatever shares. JPMC will say, no, whatever shares you want to enter will not work. They have a lot. Lot size will be decided by NYSE. So I would see what is the lot size and I will come back to you. And broker will go to, now they do not go physically to the exchange. They will go to the website of NYSE and will see what are the options available. So NYSE for IBM shares has this option available. What are the options available? Like this I have shown. For Apollo Tire, what is the option available? What is the lot size? What is the price right now going on? And this price keeps on changing. Price for forward contract remains same. For futures, it keeps on changing, right? What is the lot size? So what is the expiry date? It will be written somewhere. The expiry date is 29 September. So expiry date will be mentioned clearly, right? So look at it. So JPMC will go to NYSE's website and look for IBM shares futures. It will find all this information. And that expiry is August. Expiry date is 26th August. Underlying asset is IBM equity shares. Lot size is 1,000 shares. Margins is 20%. Over here, margin is not written. Is it written anywhere? Over here, margin is not written. The reason is simple. Because it is not a broker's website or exchange website, right? This is just a database, data platform, and the margin keeps on changing. So if you really want to execute the deal, you can go to NSE's website. When market is open, you will find the margin also written over there very clearly, which broker will find. Broker will find the margin. You will find the margin on broker's platform. So try to understand. If you are one of the party or client, you will find margins on broker's platform. Broker will also provide you platform. Those who trade in the stock market, they know that they do not get a platform of NSE or BSE. They get a platform of Zerodha. Zerodha provides them a platform, or whosoever is the brokerage company they are taking the services from. They provide them platform. Seeing their platform, they can You get to know what is the price going up and down, what is the margin and all. All will be provided. And to JPMC, the broker will see all this information on NSE's website in India. And here we are talking about US company, so NYSE's website. So all this information is pre-decided. Who has given all this information? NYSE has given all this information on IBM shares futures. So JPMC will say here, if you want to buy 1500 shares, the option is not available. You can only buy one lot or that is 1000 shares or in multiples of thousands. So if you are okay, I can put an order to sell 2 lots. If you are okay to put, I can put an order to sell 1 lot. But 1500 shares would not be a possibility. So, Fidelity will say, okay, put to an order to sell 1 lot, right? So JPMC will take a short position on behalf of its client Fidelity and put an order to sell, put a sell order to sell it, for example, 1 lot at 223. In that case, this trade will not happen. Why? Why this trade will not happen? The buyer wants to buy. Yeah, the buyer wants to buy 1 lot at what price? 222. The seller want to sell the lot at what price? 223. The exchange do not decide the price. That is what I'm telling you. Exchange do not decide the price. Other than price, everything is decided. Can you see? Expiry date is decided by exchange. Lot size is decided by exchange. Underlying asset is decided by exchange. Type of settlement is decided by exchange. Mostly, as I said, it would be cash. Make it cash. Margin is decided by exchange. Price is not decided by exchange. Price is decided by investors. And price is decided by the demand and supply. Right? So people will quote the price. People will do what? People will okay, so this is only till here. You have to cover only this much. Yeah. So where was I? So people will put the price. Okay, I want to sell 1 lot at 223. Broker here is saying that I want to buy 1 lot at 222. So my bid order is this. My sell order is this. This will not match. This order will only match when either the buyer increases the price to 223 or the seller decreases the price to 222. Basically, the price should match. Right? So as soon as, for example, JPMC say, okay, I'm ready to sell the lot at 222, immediately the transaction will be completed. Immediately the transaction would be completed. Why? Because the price, bid order and sell order price matches, the quantity matches, rest everything is same. Right? As soon as the trade happens, what will happen then? As soon as this trade happens, as per the contract, Goldman Sachs will have to transfer 20% of the initial margin to whom? To exchange. So initial margin, Goldman Sachs will have to give to exchange as cash collateral. How much would that be equal to? That would be equal to 222, the price into how many shares are there in 1 lot? 1000 shares into 20%. $44,400 will be transferred from Goldman Sachs to exchange. Will Goldman Sachs will bear it from its own pocket? No. Goldman Sachs immediately will take that much of initial collateral from KKR hedge fund. So KKR hedge fund will transfer initial margin to Goldman Sachs to the tune of $44,400 as cash collateral. So in the book of Goldman Sachs, KKR hedge fund ledger account will be created, where on 5th July, when this trade is happening, Goldman Sachs will find a credit of 44,400 from KKR hedge fund. because KKR hedge fund will transfer $44,400 to Goldman Sachs. Now, by the end of the day, that is at 3:30, the share price goes down to or goes up to. Let me see. This is these values are not matching, but it's fine. For example, here at 3:30, the prices went up to 221, 231. The prices went up to what? Sorry, went down to 215. So 3:30, what is the price, closing price? At 3:30 on 5th July, what is the closing price?
215.
250. So mark to market loss will occur for whom? For Goldman Sachs. Mark to market loss will be occurring from whom? For Goldman Sachs. Why? Because Goldman Sachs bought a forward contract at what price?
222.
The same contract has closed at what price?
215.
So what is the loss for Goldman Sachs? Because Goldman Sachs is a big position. 7 rupees, right? So 7 into 1,000.
1,000.
7 into 1,000. So what is the total loss? $7,000.
7,000.
Immediately $7,000 would be debited from the account of KKR hedge fund by Goldman Sachs. So MTM loss over here basically. So gain will be credited, loss will be debited, right? Here it is a loss.
What is
Immediate.
MTM? Sorry.
Mark to market.
Mark to
Yesterday
market.
was mark to market, right?
Okay. Yeah.
Initial margin has to be paid as well as mark to market margins needs to be maintained. That is what we have seen yesterday when we have seen the difference between exchange and OTC market. Right? Now, what is the initial margin value left with in the books of Goldman Sachs on the account of KKR hedge fund?
24,400 minus
37,400. 37,400. So immediately a call will go from Goldman Sachs to KKR hedge fund. Hey, your margin money is short by $7,000. You need to maintain an initial margin of $44,400. Please transfer the balance amount to your account. Otherwise, I will cancel. I will set off the deal tomorrow morning as soon as the market opens at whatever price would be. Immediately, KKR hedge fund will transfer the balance amount. That means this 44,400 initial margin needs to maintain come what happens. Till that time, the position remain open for KKR hedge fund. So since the position is open for KKR hedge fund, 44,400 needs to maintain. So KKR hedge fund will have to transfer the balance value. The balance value is 44,400. That this needs to be maintained minus what it has right now. What it has?
31.
So the balance is 7,000. Immediately bank transfer will happen before the market opens. On next day, the bank transfer has to happen from from KKR hedge fund to Goldman Sachs. And the same thing will happen between Goldman Sachs and NYSE. NYSE also will maintain books of accounts, ledger account, not for KKR hedge fund, but for Goldman Sachs. Until the transaction is opened, contract is open, till that time, initial margin needs to be maintained in a similar fashion. So whatever 44,400 has been transferred from KKR hedge fund to Goldman Sachs will transfer it to NYSE. Then whatever the balance amount which KKR hedge fund has transferred to Goldman Sachs, the same will be transferred immediately to NYSE. Right? Now, if the prices would have been 231, for example, the closing price would have been what? 231.
231.
Or maybe 232. What is the gain? 10 rupees gain. What is the or make it 242. The closing price is how much? 242 or 330. So what is the gain for Goldman's KKR hedge fund? 20 rupees
20.
gain. 20 rupees gain. So rather than 7,000 getting credited as mark to market loss, rather than what get debited as mark to market loss, 20 into
20,000.
7,000, that is 14,000 will be credited as mark to market gain. So the balance would increase by 58,400, right? This time, KKR hedge fund will call Goldman Sachs. Hey, I need to maintain only 44,400 worth of margin. You have 58,400 worth of value in my account. Transfer 14,000 to me, which is the balance value. 40. This time, bank transfer will happen not in terms of deposit. It will be in terms of. It will not be the money deposited to Goldman Sachs. It will be the money withdrawn from Goldman Sachs, right? So 14,000 will be debited from its account over here in the books of Goldman Sachs and will be credited in the accounts of KKR hedge fund, right? And ultimately, what would be the balance of margin? It will be brought back to the minimum margin requirement, that is 44,400. So this will keep on happening. M2M gain, MTM loss. It will keep on happening till
Settlement date.
Till the settlement date or the end of trade, because it is an exchange traded transaction. 5 July 10 a.m. KKR hedge fund has bought one lot. 5 July 10:05 a.m. it can sell the same lot at the market price and the transaction will be closed. So
Sorry, please repeat that part.
So this accounting will be maintained till the happening of two events. Either the transaction is closed by Goldman Sachs for KKR hedge fund, or the settlement days arrive.
Okay.
This contract can remain open till settlement date. Post settlement date, on settlement date, this contract needs to be mandatorily settled.
Okay.
Before settlement date, if party wants to or wish to sell or close the transaction, they can close the transaction, because it is an exchange. That facility is available, which is not available in case of forward contract. In forward contract, you cannot pre-exit or you cannot exit the contract before the settlement date.
Got it.
But in futures, you can exit very next second. The time you enter, very next second, you can exit by reversing the transaction. So if you are a buyer to the transaction, become a seller to the transaction, set off. Transaction will be set off. And profit and gain loss will be immediately settled. With exchange, you are not settling profit and loss with the JPMC or Fidelity. You are settling profit and loss with exchange. So though KKR hedge fund was the buyer in this transaction and JPMC was selling in this transaction, it may so happen that JPMC immediately come out of this transaction by buying in the very next second. Whereas KKR hedge fund remain for the next 30 days as a buyer with this transaction. Basically, the position of JPMC will be taken up by someone else. The position of Fidelity will be taken up by someone else. The contract will remain open, will keep on trading between parties. But for individual parties, the contract can be closed before the expiry date itself or before the settlement date itself by reversing the transaction. So if you are a buyer in the transaction, become a seller in the transaction at whatever the market price is and settle off. So for example, on 5th July 10 a.m., KKR hedge fund become a buyer at the price of 222. At the same time, at 10:05 a.m., the same Subramania, the one who had received the call from Lord Krishna, this time received the call from Lord Hanumana. And Lord Hanumana say, hey Subramania, the deal which you are trying to do with IBM shares with your view is actually wrong. There is one information which Lord Krishna might have missed. And now he has gone into deep dhyan. So he has asked me to call you, and I'm calling you and telling you that there is one new information which has come to Lord Krishna that will set the prices of KKR, the IBM shares to fall drastically from here. So please, if you have taken any position, immediately close it off. Immediately, Subramaniam will call its broker GS. Hey, whatever the sell price is available, I want to sell it immediately. Even if it incurs me some losses, let it be. Please sell it. So for example, at that time, 10.5, when Goldman Sachs received a call from KKR Hedge Fund, the price which was going on is what? 202.5. Immediately, if KKR Hedge Fund is ready to book the loss, immediately GS will sell the contract. What is the loss? What is the loss?
17.5.
The loss per share is 19.5 rupees. 19.5 into 1,000 shares. Total loss is 19,500. What was the initial margin paid by KKR Hedge Fund to Goldman Sachs? 44,400 while booking the call at 10 a.m. So from that initial margin, this 19,500 will be removed. Remaining 24,900 will be paid back to KKR Hedge Fund. The deal is closed. KKR Hedge Fund do not have to wait till 26th August to come out of it. That is possible because it's a futures contract. The price of the contract keeps on changing based on the demand and supply. Is it clear?
Yes.
Anyone has any question on it? So that is what a futures contract is, guys. As simple as that. Same side story can be there where JPMC keeps and books of accounts for Fidelity. And similarly, the Fidelity will also have to pay 20% of the value as initial margin to JPMC, which JPMC will pay to F&O. And as the price goes up and down, accordingly, the daily M2M losses or gain will be calculated. And accordingly, the accounts will be maintained till the time either the settlement date arrives or Fidelity comes out of the transaction by squaring off its position, whichever is early. Right? Any question on this? Tell me any question if you have. Anyone? All right. There are no questions. So this is what I had planned for futures. So we have seen an example, and this is how the trading happens with the help of brokers and NYSE as a contract, as an exchange. And that's how the accounting is maintained with respect to initial margin and the MTM. And that is all about futures. With only a limited amount of initial margin, you can do a very large trade also. I just gave you an example, right? With only depends on initial margin, how much money you actually have to invest. And you can take a position which is much bigger, right? So you need only small amount of money to do even a big, large transaction, right? So, okay, so that is all about futures and forwards. Now we will discuss options, but let's take a break of 10 minutes and then let's go into options then. Okay, 10-15 minutes of break and we come back. Yeah.
Okay. Thank you so much.
Okay. Yeah. Okay. So guys, I think you guys would have been back by now. All right. So after understanding these futures and forwards, now we will move towards options. Option name is very attractive, right? Everybody like options in their life. As many options you have, good it is for you, right? But what I feel is options sometimes also make it very confusing and challenging, and it takes away your happiness. If you look at a happiness index, it has actually, rather than improving, it has gone down after having so many options actually. There was an era when number of options for any particular things used to be very limited. So you used to save a lot of time in choosing things. Now for each of the things, you have so many options. You go to buy a anything, mobile phone, so many options. Laptop, so many options, and it makes you very confusing. And the process of reaching to a conclusion is so tiring that most of the time, in the end, you end up making a decision which is the worst decision of your life. Most of the time it happens, right? So sometimes we feel that life is so much of contrarian rather than what we think. So things happens in a contrary. We think options will add happiness. It actually ruins your happiness. So is options over here. Very high risk product. Gives a lot of options, but comes with a cost. So we'll talk about it now. So options, with respect to options can be traded on exchange, or options can be OTC. So with respect to options, both possibilities are there. You can have OTC traded options. You can have exchange traded options. Under options, there are two types: call options and put options. So when you talk about OTC traded options, you can say OTC call option, OTC put option. When you talk about exchange traded options, you can say ETD, exchange traded derivative call option, ETD call option, ETD put option. So options can be both OTC traded as well as exchange traded. OTC traded options can be OTC call option, OTC put option. Exchange traded options can be ETD, exchange traded derivatives, ETD call option and ETD put option. Now, the name option has a relevance because option as a derivative provides you choice. The choice is always with the buyer of the option. The choice is always with the buyer of the option. Even if it is call option or put option, the choice is always with the buyer of the option. The buyer has the choice. One of the party in the trade contract has a choice, the right to exercise the option. So here comes the word right. So far, whatever derivatives we have looked, all derivatives had a word obligation. This is a type of derivatives which has a word called right. So one of the party in the trade contract, option contract, has a right to exercise, has a choice. It is his choice to exercise his right or let go his right. The other party will have obligation to perform the contract when the first exercise their right. And that other party is the seller of the contract. So seller of the option contract will always have the obligation to perform. Buyer of the call option, buyer of the option will have the right to perform. If he wants to perform, he performs. If he doesn't want to perform, he'll let go the option. And all options comes with a cost. So option buyer, to have this or to enjoy this right, option buyer to enjoy this right, need to pay a premium to option seller. So that premium is the price. To obtain that right, to exercise or not to exercise, all rights come with premium, or all rights come with cost. The cost in case of options is premium. The premium has to be paid by the buyer of the option to the seller of the option. That is the price which has to be paid. It's a fee, it's a price which has to be paid. It is not a margin, where at the time of settlement, margin money gets settled with your loss and only the difference value you have to pay or receive. It is a price you have to pay and you have to forget about it. Come what happens, final outcome on settlement day, whatever it happens, that price will not be adjusted against your profit or loss. That's the price you have to pay. It's paid means it's paid. So let's look at it. Two parties enter into, first we are talking about call option. Call means buy, put means sell. So call option contract, two parties, counterparty 1, counterparty 2. We're talking about the OTC call option contract, two parties, counterparty 1, counterparty 2. Counterparty 1 has the right to buy underlying asset at its particular strike price. The strike price is nothing but the exercise price. What we used to have in forward contract as settlement price is the same, is known as a strike price in case of options. So counterparty 1, who is considered to be the buyer of the call option contract, who is having a long position in the call option contract, has the right to buy, has the right to buy. If he wishes to buy, he buys. If he wishes to not buy, he would not buy. Right to buy. He is supposed to have a long position in the call option contract. Long position in the call option contract gives him the right to buy. Counterparty 2, on the other hand, is the seller of the call option contract, is the writer of the call option contract. You can call him seller of the call option contract, writer of the call option contract, or having a short position in the call option contract. Counterparty 2, you can call him seller of the contract, writer of the call option contract, or holding a short position in the call option contract. And this counterparty 2 has the obligation to sell the underlying asset at a strike price if counterparty 1, that is call option buyer, exercise his right or choose to buy the asset. If counterparty 1, which is a call option buyer, wants to exercise his right, it is the obligation of counterparty 2 to oblige. That means if call option buyer wants to buy, call option seller will have to sell that underlying asset. If call option buyer doesn't want to buy the asset, call option seller would not be forcing the call option buyer to buy the asset. Unlike in forward contract, both the parties have to oblige. The forward contract buyer has to buy the asset, forward contract seller has to sell the asset. If forward contract seller is selling the asset but buyer doesn't want to buy, still he will have to buy. मन नहीं है लेकिन करना पड़ेगा because आप बाध्य है कॉन्ट्रैक्ट की वजह से. कॉन्ट्रैक्ट की वजह से you are engaged. You can't say no. Here, you can say no. Who can say no?
Buyer.
Counterparty 1. That is call option buyer. If call option buyer say, no, I don't want to buy the underlying asset, counterparty 2 cannot force counterparty 1 to buy the asset. But if counterparty 1, that is call option buyer, wants to buy the asset, Counterparty 2 cannot deny, no, I will not sell the asset. It has no power to say that. It has the obligation to sell if call option buyer wants to buy the underlying asset. So counterparty 2, you can say, is giving the option to counterparty 1, right? And it's taking a lot of risk. So obviously, counterparty 2, by taking this risk, will say, boss, I am giving you an option. You will have to pay me premium. A premium which will never be reversed. Come what happens, how the deals get settled, whoever is the beneficiary party. But I will not pay your premium back. If I lose 100 rupees, I will pay you 100 rupees at the time of settlement. If you lose 100 rupees, you can't say, no, I will pay you 100 minus something what I have already paid you. That is not possible. If I lose 100 rupees as a call option seller, I will pay you 100 rupees at the time of settlement. But if you lose 100 rupees as a call option buyer, you can't say that I will pay you 100 minus the premium which I already paid. It is a premium we are talking about. It is not initial margin. So once you have paid the premium, it is gone. You don't have any ownership on it, right? So counterparty 2, call option seller, is a party which has to oblige. So it's an obligatory party. Counterparty 1, which is a call option buyer, is has the right but no obligation. So it is a party with a choice. The choice is to exercise the right to buy the underlying asset at a particular strike price, or the second choice is let the option lapse. Obligating party, being obligated in the contract, call option sellers will receive premium income from the call option buyer for giving this option to call option buyer. So for getting this kind of right in the contract, call option buyer will have to pay option premium, option cost, option price, whatever you call it, to call option seller or call option writer. So things will clear when we will see one example also. Now, one more thing, we'll touch upon it as we'll see this example. Mind it, this is OTC call option we're talking about. This is OTC call option we're talking about. We're not talking about exchange traded option, right? So far. Abdul, counterparty 1. Great name, Abdul. Right? Counterparty 1, Abdul. Trade date 6th July. Wonderful day. 6th July. Today is 28th August. 6th July. Trade date. Gold prices are revolving around 4,500 rupees. Wonderful day. Today you can't get gold on this price, right? Today gold prices are 5,000 plus. Gone are those days when gold prices were 4,500. Now everybody feels that if I would have bought the gold at that price, how lovely it would have been. Gold. Price of gold on 6th July, spot market 4,500 rupees per gram. Abdul enters into a contract with Aarti. Abdul enters into a contract with the Aarti, where Abdul plays the role of call option buyer, Aarti plays the role of call option seller. Counterparty 1, Abdul, and counterparty 2, Aarti, decides on these terms and conditions. What are these terms and conditions? Trade date 6th July, underlying asset 24 karat gold, quantity 1,000 gram. When you are talking about derivatives, guys, don't think that Abdul actually has that much of wherewithal to have 1,000 gram of gold. But in options, in derivatives, as I told you, you don't need that much of money to put upfront. Settlement can happen in cash only in the difference of the prices. So the volumes at which you can trade can be much higher. When I was, 16 and 17-year-old, I used to know there's this guy Mehtaji in my hometown. So his shop was near to my shop. So I used to sit at my shop that 9th and 10th class. I sat on my shop every day. I prepared for my board exam sitting at the shop only while dealing with customers and all. So because he was my neighbor, so we used to interact a lot. When I used to talk to him, and suddenly and mobile phone used to, were very new at that point in time. I'm talking about 2006. In my hometown, it was very new. So 2005, 2006, mobile phone. Those Nokia 1100. Those were the mobile phones which were very available in those days. Those 6600 was also there, but people used to keep those Nokia 1100. So phone करता था, 2 किलो गोल्ड बेच दो, 5 किलो गोल्ड खरीद लो, buy 7 kilo gold, sell 20 kilo silver, sell 50 kilo silver, buy 30 kilo silver. I used to think, Mehtaji, you are so rich. Why do you sit in this market in this small shop? Because it's not like I didn't used to understand what is option, what is futures. But इतना समझ में आता था कि 1 किलो का गोल्ड का प्राइस उस समय भी 25-30 लाख रुपए के आसपास हुआ था. And you are talking on phone कि भाई buy 5 kilo gold, 7 kilo gold. And कहाँ से मतलब?
This
how-
reminded me of that movie, Salim Fake,
Uh-huh.
he keeps on talking on call.
हाँ,
The Angrez movie. This is Telugu
Huh.
Hindu movie,
okay.
and basically he is trying to get attention of a girl, and on the small phone, he keeps on saying, "Ha, Ferrari bicha de, this ye bicha de."
So something like this, right? So, and today this Mehtaji is actually no more comes to market anymore. He is completely washed off, and situation is very poor. He's not turned himself into beggar. That's a different thing. But situation is something like that only. So he just runs away from people now because you never know. Mehtaji actually has taken so much money or to do this trading from so many people. He forgets कितना पैसा किसने लिया है क्योंकि दिया अभी तक किसी को नहीं है. So he just run away from people because he doesn't know who would call him and started asking about कि भाई वो 5 लाख रुपए तब दिया था उसका क्या हुआ, ब्याज तो छोड़ो, मूल रकम तो दे दो. So Mehtaji used to wear white top to down, complete white, एकदम fresh white and एकदम कड़क. I don't know, well ironed, well dressed, always white, white shoes, white kurta, white dhoti. Today you would always found him in a torn vest most of the time. So trading is that dangerous. I feel pity on Mehtaji, but thankfully I didn't learn this art of selling 5 kg gold and 10 kg gold. So don't get misguided by this 1000 gram gold. That's what I'm telling you. Abdul might be a car driver. Aarti might be a spinner, or Aarti might be a housewife having very limited cash, but still they can do this kind of transaction. Why? Because you do not have to really exchange 1000 gram of gold, and you do not have to actually exchange 25 lakh or 45 lakh rupees. So yes, this kind of trade can happen. So yeah, underlying asset is gold 24 carats. Quantity they have decided is 1000 gram. Strike price they have decided is 4,500. Strike price they have decided is 4,500 per gram. Now you can say, how come spot price is same as strike price? Again, no particular answer. It should be a bit higher, obviously, but if it is not higher, even if it is lower, you can't say anything. Why? Because one of the factor we know is storage cost. Another factor is future perspective on demand and supply of gold. And that is always something which is not known, right? So that is why strike price can be 4,500, it can be more 4,550 or something like that. Expiry date is 31st July, so almost a month kind of tenure. Style of exercise. When you are talking about options, there is something called as a style of exercise. This kind of condition was not there in forwards or futures. It is already only there in options. Style of exercise. There are three styles of exercise which are possible in options: European, American, Bermudian. European, they say, are very conservative. Europe is a very conservative society. Still king rules, right? Though you would think that they are very open and all, but if you go and live over there, you'll find it's a very closed society. It's very conservative. Don't go on their attire or external appearances, but as such, they are very, Europeans are supposed to be very conservative society. Whereas America, being a cosmopolitan country, has a very open culture, has a very open, very progressive kind of society. Bermudian is somewhere in between. So the name are given because of their conservatism or aggressiveness or optimism. European style of exercise basically means that these options which are given to the call option buyer can only be exercised at the time of expiry date. So whatever is the price on the expiry date in the spot market, Abdul will look at that price and would decide on only on expiry date that would it like to go ahead to use the option or not to use the option. American, being a more progressive society, so the name of option style of exercise is American. Why? Because there you can call option buyer has the right to exercise its right to buy any day from the day of trade date till expiry date. So though it is an OTC contract, but it would sound you like an exchange traded contract, because you can sell, sorry, you can buy or you can exercise at any point in time. And Bermudian is something in between, where options can be exercised on predefined specified dates, including expiry. So if you are going with Bermudian option, then you will both the parties will have to decide out from 6th July till 31st July on what different dates the option can be exercised. Those dates will be pre-decided between both the parties. With European, yeah, Neil, go ahead.
Sorry. So the European would be on 31st July, the buyer can either decide to buy or not buy. That decision will only be valid on 31st July itself.
Yes, not before that.
Okay. Okay. Thank you.
On American, it is possible to do or exercise the option on any day. And Bermudian, the dates will be pre-decided. For example, they will say, okay, from 6th July to 31st July, if whatever Friday comes, you have the right to exercise on Fridays. So there will be 3 or 4 Fridays which will come between these two dates. So on those Fridays, whatever the price, spot market price, seeing that if Abdul wants to exercise his right, he can, or he can let it. So style of exercise needs to be decided. It can be either European or American or Bermudian. Any questions so far? Any questions so far, guys? Anyone?
Why we are not having premium included here?
No, the premium will come, right? We have reached till style of exercise, then
Okay, 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 okay.
settlement, premium. Upfront premium has to be paid, otherwise this
Mhm.
contract.
Okay, okay. Thank you.
Right. So far, any question? Okay. Then another perspective, which is type of settlement. Generally, all these contracts will be cash settled, generally. But can they be physically settled? Yes. Decides, it's a customizing things, right? OTC contracts are customizable, right? So things can be decided. But with both the parties. If parties agrees to go with physical settlement, they can, or there are only two options. Either it can be physical settlement or cash settlement. As simple as that. So I'm telling you, because the option of cash settlement is there, that is why most of the time you will find that quantity will always be much bigger than what potentially they can afford. Because they would not have to present 1,000 grams of gold to Abdul if it is cash settled. Aarti and Abdul will only have to talk about the gaining and losing party, and only the difference amount is to be exchanged. So that is why, because options of cash settlements are there, that is why you'll see that people trading on quantity which is much bigger than their actual capacity. Then comes option cost or price for the option or premium that will be decided. For example, here it is decided to be 50 rupees per gram. So basically, option buyer, that is Abdul, will have to pay upfront on the trade day itself 50 rupees per gram multiplied by 1,000 gram to Aarti for this trade to actually begin on 6th July itself. So upfront premium will be made by Abdul to Aarti to the tune of 50,000 rupees, that is rupees per gram into 1,000 gram to Aarti on 6th July itself. Then only the trade will start, which has an expiry date of 31st July. Here we are choosing the style of exercise to be. Here we are choosing the style of exercise to be European.
European.
So let's see. In European style of exercise, doesn't matter what is the price on date other than 31st July, right? Yes or no?
Yes.
Yes.
So on 31st July, depending on what is the spot price, accordingly, Abdul will choose to either let the option lapse or to exercise the option. Yes or no? Right?
Yes.
So, for example, these are the possible scenarios of the price on 31st July. I have created 13 scenarios over here, starting from 2,500 to 6,000. And let's decide on behalf of Abdul, what would Abdul do? So, for example, if the spot price on 31st July of 24 karat gold is 2,500, tell me, would Abdul exercise the option to buy the gold at the price of 4,500, or would it let the option lapse?
He should let the option lapse.
If we let the option lapse, what is the actual loss to Abdul? The actual
50.
loss to the Abdul is 50 rupees per gram. That is premium paid. That is 50,000 rupees. So for Abdul, the maximum loss can never go beyond 50,000. Think about it. For Abdul, the potential loss cannot go beyond 50,000 because he has the option to choose. If he had no, if in case if he had no option, and if it would have been a forward contract, come what happens, Abdul would have to buy at 2,500 rupees, right? And he would have incurred a loss of 2,000 rupees per gram multiplied by 1,000 rupees, which is equal to 20 lakh rupees. So his loss would have been to the tune of 20 lakh rupees. But since he has the right to choose to buy or not to buy, he's letting the option let go. So that is why his loss is only what he has paid as premium. Because I told you, premium is not going to be re-exchanged again. Premium is the price you paid, you paid. It's gone. It's not going to come back. So net payoff to Abdul will be minus 5,000. What is the net payoff for Abdul? Minus 50,000. Right? net payoff to Abdul will be what? Minus 50,000, right? Net payoff for Aarti will be positive 50,000. Why? Because Aarti has no problem. If Abdul is not subscribing his option, Aarti will say, okay, I don't have to sell it. So Aarti ended up receiving how much cash? 50,000 rupees cash as a part of premium. So entire 50,000 rupees is profit for Aarti. If the price on 31st July is 3,250, tell me, would Abdul buy the gold or would Abdul let the option lapse?
3250. Yeah, she should let it lapse because
Because if he buys at 3250, he's going to incur a loss of 1,250 rupees. On 1,000 gram, it would be equal to 12,50,000 rupees, right? So he would let the option lapse. If he let the option lapse, what is the net loss to him? Minus 50. What is the net for Aarti? What is the net gain to Aarti?
Plus
Plus
50,000.
So again, look at it. For Aarti, the gain is limited. It is always going to be 50,000, not more than 50,000. We'll talk about the loss of Aarti also, but from the perspective of gain, Aarti's gain is limited to the premium received. It can never be more than that. Yes or no? Whereas Abdul's loss is limited to 50,000, Aarti's gain is limited to 50,000. We'll talk about the gain of Abdul and loss of Aarti later. But so far, gain of Aarti is limited to 50,000. Loss of Abdul, which is the call option buyer, is limited to 50,000. If the price is 3750, should Abdul let the option go or should he subscribe to buy?
let it go.
Let it go. 4,200. Let the option lapse. 4,400. Still let the option lapse. 4,450 rupees. Let the option lapse. 4,490 rupees. Let the option lapse. 4,510 rupees. What should I do?
Think about it. I mean, yes, sell or buy it.
Buy it. Why?
So 10 rupees.
So he can still reduce his loss from 50,000 to 40,000. Right? His loss is what he's paid the premium, right? That is 50. Now here by entering into this transaction in the spot market, he can sell at 4,510 and at the as per the contract, he can choose to buy at 4,500. So he'll buy at a price of 450, 4,500 and immediately in the spot market, he can sell it at 4,510, right? So by subscribing to this option, he will be considered as a gaining party by the amount of 10 rupees. So Aarti will have to transfer 10 into 1,000, that is 10,000 rupees to Abdul. Still, Abdul is not making profit. Still, he is making loss, but still, he is making lesser loss than earlier, right? Now his loss is 40,000. Earlier, it was how much? For all the scenarios, it was 50,000. So he can still reduce down his losses. And if he subscribes to this option, the net pay of Aarti will go down by 10,000. So from 50,000, it will go down to
40,000.
40,000. So far, it was profit of 50,000. Now, for the first time, her profit gets down from 50 to 40. Whereas loss of Abdul gets down from minus 50 to minus 40. At 4,550, what should Abdul do?
Buy it.
He should buy it. If he buys it, he get a gain of 50,000, right? So his overall gain will be? Though his overall gain will be?
0.
So, but still, it is better than his loss of 40,000, right?
Yes.
And for Aarti, overall gain will be
0.
0. So Aarti would be crying, Abdul would be laughing. Because Abdul, ultimately, both parties are okay because nobody's gain, nobody loss, right? If price is 4600,
Buy it.
buy it, gain of 100 rupees, ultimate gain of 50,000 rupees for Abdul, right? 1 lakh is the gain from the transaction, but 50,000 is the premium paid, was the cost. So net payoff was 50. For Aarti, what is the net payoff? Minus 50,000 now. Because she received 50,000 as premium, but now she has to pay 1 lakh rupees as the difference value because it's a losing party in the contract. And so on and so forth. At the price 6,000, you will find when the gold prices goes to 6,000, you will find the gain of
Buyer keeps on increasing.
14 lakh 50,000, whereas gain of Aarti, loss of Aarti is 14 lakh 50,000. So if you talk about gain for Abdul, it is unlimited. It can go any level. If, for example, gold prices are 10,000, the gain will further go up. The loss for Aarti is unlimited. So call option buyer, loss is limited to the premium paid, gain is unlimited. Call option seller, gain is limited to the premium received, but loss is unlimited. So unlimited downside risk for the call option seller. Unlimited upside opportunity for the call option buyer. So if you will see their graph, their payoff graphs, it would look like something like this. Whereas the blue color is for net payoff for call option buyer. So if you see net payoff for call option buyer, the loss is limited. This is negative, right? This is negative derivative. The loss is limited to 50,000. And then profit is unlimited, can go up at any level. Whereas for call option seller, the profit is limited. It is above 0, right? So the profit is limited to 50,000, but loss can be limited in the negative territory. It can go to any level. So it would be completely opposite. The payoff graph for OTC call option will be completely opposite to each other. Exact mirror replica. Because it's a zero-sum game. It's a zero-sum game. One party's gain is another party's loss. No other value is getting created. Option is fun game. Now, option has some economic value, a lot of economic value also. Because options for hedgers are very useful. Try to understand. The problem for Britannia Industry Limited was what? Even if the market price goes down to 30, Britannia will have to buy the wheat at 36 only, because it has the obligation to buy. Even if we can see clearly that Britannia is worse off by 6 rupees into 10 lakh, that is 60 lakh rupees, still it has no other option. But if Britannia would have been a call option buyer, think about it. Obviously, it would have to pay some premium. But still, if the price goes down to 30, Britannia can say no and let the option to lapse to buy at 36 and can buy from the open market at 30 rupees, right? Yes or no? So option enhances the possibilities for buyers of the contract. So downside risk was protected for Britannia by entering into it at the cost of upside potential ka loss. Here, Britannia is protecting downside risk as well as taking advantage of upside opportunities. Minus the premium paid. The premium has to be paid. So option as such enhances the possibilities for the buyers. And it comes at a fixed cost of premium. So it has economic value also. Though I gave you an example of Mehtaji, don't get disheartened of it and start thinking that options are culprits and they are sin. They are not sin. They have a lot of economic value also. They're an enhanced product than forwards, right? But it comes at a cost, premium. Is it clear so far?
Yes, sir.
Yes.
Right. In this case, if the same option would have come up with American style of exercise, then what would have happened? Let's think. Then you would have to look at the price on daily basis. Abdul would have looked at the prices on daily basis. 7th July, 8th July, 9th July, 10th July, 11th July, 12th July. In July. Then look at the daily prices. And daily basis, it has to make a decision. Should Abdul exercise the option to buy? Should Abdul let the option lapse? Or should Abdul wait for next day and see what are the next day's prices are? Choice for Abdul then become 3 in American option. In European options, the choice are only 2. On the day of settlement, you either have to say, yes, I want to exercise the option, or you can say, no, I want the option to lapse. There is no option to hold or wait. In an American option, since you have to look at spot prices on daily basis, you can say, either I want to exercise, or I want to let it lapse, or I'm ready to hold. And an intelligent person will always wait till the last day. If the prices are not in his favor, he will not let the option lapse during the tenure. He will wait till the last day. Because lapse, so he can always say on the last day also, he's not going to lose anything now after paying premium. The premium is the only thing which he's going to lose, which he's going to lose on any day when he says lapse. I want to let the option lapse. So an intelligent person would never let the option lapse till the end. But still, it's an option for him. If he wants to say it, it's his choice. You can't say, no, 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 I hold you a dumb if you say lapse in between. It is his choice. You cannot take away the choice from the person, right? But obviously, it will not be subscribed choice. He would let it hold. If prices are not in his favor, he will let the option hold till end, right? So in an American options, everyday spot prices will be checked by Abdul. If any day the spot prices are coming in favor, he can let the option exercise, but still it is not mandatory. For example, on 9th July, the prices are what? What's the price? 4600. Good amount of profit over here. He's making a 50,000 rupees of net profit over here, right? Because he's making a profit of 100, but he has paid a premium of 50. So total he's making a profit of 50 on 1,000 gram, it turns into 50,000. So he's making a 50,000. Sorry, guys. Yeah. On 9th July, if you look at it, the price is 4,600, right? If he decides to exercise, he's getting 50,000 rupees net off, right? Still, Surabhi, you need to understand. Human beings have a powerful emotion called greed. On 9th July, what would Abdul see? He'll see the price 4,600, but he will feel like, abhi to 9th July hai, I have option till 31st July. Prices has just started climbing up. It started climbing at from 5,430. Next day it went to 555, 4,500, 4,550. Now it has gone to 4,600. There's high chance that it can go to, his imagination can take the price even to 10,000. Human being, full of greed. Right? They say greed is important. And there are contrarian view also. But yeah, on 9th July, most possibly, Abdul would not choose the option. And then comes 12th July. Extreme profit. 4,750 will be. At 4,750, Abdul can make a profit of 200 into 1,000. That is 2 lakh rupees. Still, Abdul is thinking that no, prices to chappar faad ke upar jayega. Prices will go to maybe 15,000. The way it is increasing every day, 200, 300, 200, 300. For a period of 10 more days, it will go up by 3,000 at least. So where I have an opportunity to make 30 lakh rupees, why should I get settled for 2 lakh rupees? That is what Abdul is thinking. But then he faces the reality on 13th July itself. Prices goes down to 4,400. Today, at this price of 4,400, even if he wants to exercise, he can't because he made a loss of 100,000. And 50,000 premium he has already paid. Total loss will be minus 150,000. So he will not exercise it ever. And comes 31st July, the price is at 3,500. So greed is good, they say, but for Abdul, it doesn't seem to be correct. Right? He would not let, finally, he would let the option lapse. Right? So that is how it is. That is what I told you. Too many options are also not good. Because now he will be very, 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 very sad. You know why, Anil? Because the pain is not only that he had to let the option lapse. The pain is actually more. Why? Arey yaar, itni badi opportunity. I could have made 2 lakh rupees. I could have made 2 lakh rupees. Now he would just keep thinking I could have made 2 lakh rupees. I could have made 2 lakh rupees. Why? Because that option was there with him. In case of European option style of exercise, that option is not there. So he will never think like that. But here, too many options, I told you. Rather than increasing the happiness index, it actually removes it actually deproves your happiness. But whatever it is reality. So now Abdul will be very sad, but still, this is how he would decide most of the time. Any question? Anyone? Come on.
Sumit, every buyer have the right to go with any kind of style of exercise?
Both parties have to mutually agree on it.
Okay.
Both parties would have to mutually agree on it. Buyer wants to go with American, but seller says no, I'm not comfortable with American. I would only like to go with European. Then the trade cannot happen because these are customized, right?
Okay.
What is fixed is that when these are decided, then every buyer has the right to choose. That is fixed as per the product. But before this decisions on terms and conditions needs to be matched. It is as good as I used to say that if buyer wants to keep the strike price as 4,400, but seller wants to keep the strike price as 4,600, the trade can never happen, right?
Yes.
So both parties have to agree on all these terms and conditions mutually. Then only this contract can see a day,
Yes.
right? Yeah. Any more question, guys? Anyone? Come on. Anyone? No question, guys? Okay, then let's take attendance and then we'll go to the next topic. Please give a second. Okay. So now it's attendance time. I got a message. I continue traveling long term. Okay. So now it's attendance time, and most of the video should be on at least at the time of taking attendance, right? Okay. Satyaki is present. Today is date 28th.
Hello,
This
hello.
video is off. Okay. Yes. Shweta Haram, Jati Karta Kareem, Priyanka. Priyanka, Priyanka, you're present, right?
Yes.
Satyaki, please go on mute because there's a lot of confusion. I have marked you present. Don't worry. Okay. Praveen Kumar. Is Praveen Kumar there? Amesh is there. Santosh is there. Shravan is Aditya Podar.
Present, sir.
Anand Kishore. Sujata.
Good evening, sir. Present, sir.
Good evening. Good evening. Ratnesh. Monica.
Yes, Sumit.
Yash Pratap Singh. Subhalakshmi Behra. Rakshanda.
Present, Sumit.
Pratik,
Yes, Sumit.
Lakshanda, you said present, right?
Yes,
Okay.
Sumit. I'm here.
Samvit Gupta, Dhruv Sardana,
Yes. Yes. Sir.
Mayank, so Pratik has kept his video on just for a second because his attendance has come. Nice, Pratik. And Dhruv has also kept his video on just to show that yes, I am also serious about attendance. Great, great, great. At least on the name of attendance, you are showing and we are talking live, right? Kind of thing. Great. Mayank Maldani.
Yes, Sumit.
Hi.
Hi, Sumit.
For a second, he saw you. Chandan is there. Surbhi is there. Shruti, yes.
Yeah, hi Sumit. Hi.
Hi. Neil is there. Neil never takes off. She is always there. Kiran Biradar. Kiran is there. So many videos are on. I just didn't notice. Kiran, are you there? No. Okay. Sai Girdhar.
Yes, present, sir.
Today your network is working fine, right? Ramesh has sent me some message. Let me check
Yeah,
it was
he's
Ramesh.
having network issues. Even
Hmm.
Richa was having network issues.
Yeah.
Yeah, hi,
Hi.
Sumit.
Oh,
Already.
okay.
Richa.
Where is Richa?
Yeah.
Oh, God. See,
Hi, Sumit.
where are you? Where are you? Where are you? Let me see. Let me see. Where are you? I can't see your camera.
As you
Where are you?
yesterday also.
I marked you present for both the
13th,
days.
13th number.
Which date? 13th November, you are saying.
No. I'm saying you're asking for the name where it is. So it's on the 13th number.
I have marked you. Don't worry. Yeah. Attendance I have marked. You told me yesterday, right? I
Yeah.
marked it today.
Okay. Thank you so much.
Yeah. Ramesh Kumar is there. Harshita Govda. She's saying that she's present on chat, right?
Sumit present.
Abhinav Kumar.
Yes, sir.
Your enthusiasm is salutable. Saurabh.
Yes, sir.
Shreya Srivastava.
Yes, sir.
Shahnaz. Yes, is there. Vijay Kumar is there. Ritik Kumar. Ankit Sarkar. Shubham is there. Smarti Seth. Mayank Sharma is there. Samir Chandrakar. Chandra. Ritvika.
Yes, sir.
Priyanka Khamkar.
Yes, sir.
Nabanita. Nabanita.
Present, Sumit.
Amrit Gupta. Shishir Nair.
Present, sir.
Okay, have I missed anyone's name? No one, right? Cool. Yeah. Now attendance is taken, so you all can go on off camera, right? You can play this game with me. But do not remember. Do not worry. I will remember whose cameras are on, whose cameras. I have very good memory, so I will remove your attendance if you go off camera, right? Sujata Kumari's attendance is taken, right? Satyaki is there. Okay, Surabhi is there. Saurabh is there.
Shashank was having troubles also. Just
Shashank Raj, right? I
Yes.
guess I have marked him present. Shashank
okay,
Raj.
okay.
Let me just check. Yeah, I have marked him present.
Okay. Thank you, sir.
ठीक है, cool. So we saw options, right? Call option. Call option writer has a obligation. Call option buyer has a right. Style of exercise can be American, Bermudian, European. Premium has to be paid. It's a fixed cost for call option buyer. Yeah. Now let's see how a investment banker play a very important role in OTC option market as a dealer. Whereas it writes options at multiple premium. And receives premium income. So this is one example I have built over here. 6th July, underlying assets Apple shares, spot price $100. The dealer is JPMC, who is giving various options to the call option buyers. So JPMC is writing a lot of options. JPMC is writing a lot of call options at multiple strike prices or at a different strike prices. And by doing it, it is going to receive premium. So who is the writer of option over here?
JPMC.
And buyer of the call option can be many.
Yes.
Aarti, Abdul, Abhishek, Agrim, Anita, Ankit, Anshika, Anuja, Chetan, G. Revati, Hari, Harish, Krishna. So many call option buyers. But who is the seller? JPMC. Seller and writer of the call option is one, JPMC. So JPMC being the seller will receive what? For writing all this option will receive what?
Premium.
Premium. And he has kept the premium like this. What is the strike price? Multiple strike price. Now see how JPMC will decide the premium. Look at it. What is the spot price of Apple?
100.
The style of exercise given is what?
America.
How is American unique?
Because every day the buyer gets a chance to exercise the rights.
It is a call option, right? So buyer would have the right to buy.
Yes.
It's a call option. Buyer will have the right to buy, right?
Yes.
Correct. Now look at it. Anshika has been offered a call option at the strike price of 100. The premium charged is 3 rupees, $3. What's the premium charged?
$3.
I don't understand. What is the current market price? 100.
100.
What is the strike price which is offered by JPMC to Anshika?
100.
100. So Anshika, by entering into this contract, is making no profit, no loss. Yes or no?
Yes.
She can immediately buy from JPMC and sell into the market. She will get no profit, no loss. Right? But there is a loss with respect to premium. Premium charge is what? 3. Look at Aarti. Aarti is buying an option from JPMC with a strike price of 60. Do you think JPMC should sell this option to Aarti at the same premium as it has sold it to Anshika, that is $3?
No, because Aarti is promising less. I mean, agreed to pay less than Anshika. Is that
That
so?
is fine. No. Think about it. It is an American style of option, right? Day one itself, Aarti will subscribe to this option because Aarti is entering into a contract to buy or the right to buy Apple share at what price?
60.
She can immediately buy from JPMC at the price of 60 and go to the market and sell it what price?
100.
In the same day, in the same minute, Aarti is going to make a profit of how much?
40.
Don't you think JPMC understand this? Don't you think JPMC understand this? So if JPMC is giving an option to buy an Aarti and option with a strike price of 60, obviously JPMC will charge the premium in a way that at least at the time of writing of the contract, JPMC is not making any loss. So the premium will be equal to what?
40.5. Okay.
The immediate loss, the difference between the spot price and the strike price, plus some value. Right? All the options between 100 to 60, look at those. Abdul is buying an option with a strike price of 75, where the spot price is 100. And if the American style of option, immediately Abdul can buy it at 75 from JPMC as by subscribing his option and sell it in the market at 100, make a profit of 25. JPMC would never let Abdul do it, right? JPMC will keep the price at 25 plus some premium. Right? These kind of options are called as in the money options. They are called as what?
In the money option.
At the time of buying the option itself, they're in the money for the buyer. Because at the time of buying itself, Aarti can make a profit of $40. At the time of buying itself, Abdul can make a profit of $25. So all of those options which has a strike price lower than the spot price will be considered as what?
In the money options.
And they will be very expensive. They will be very expensive for the buyer. Why? Knowingly, seller will not put themselves into the situation like this, right?
Right.
So all in the money options will always be costly or expensive because it has immediate intrinsic value. Immediately, RT has an intrinsic value of $40 in this transaction. Same day. At the time of buying the option itself, it is into intrinsic value. Right? Similarly, look at Anuja, Chetan, G. Revati, Hari, Harish, Krishna. They are buying the options which has a strike price of more than the spot price, right?
Yes.
So they are out of the money. They are out of the money option. Because there is no intrinsic value in buying them. There is no intrinsic value in buying them. Yes or no?
Yes.
So they would be cheaper. Because the premium will only be the premium. It will not consider that intrinsic value while deciding the premiums. And bigger the difference between the strike price and the spot price, lower will be the premium value. Because premium value, you need to understand, will be decided based on the demand of that product. If there is high demand, seller will ask for higher price. So obviously the demand for in the money options will be very high. Because everybody wants to make immediate profit. Yes or no? Whereas demand for extreme level of out of the money, that is $140. A stock to go from 100 to 140 in 1 month, 40% jump. It doesn't happen in most of the stocks. That the return is 40% in 1 month. Most of the stocks will not give you a return of 40%. So if somebody is buying, if Krishna, for example, is buying this option of call option at a strike price of 140 for 1 month from JPMC, the probability that Krishna would ever exercise this option is very low, because the probability of Apple share to give more than 40% return in the spot market in 1 month time period is very low. And that is why the premium charged on these options are very cheap, 0.05. So as far you are going from the spot price, the premium will go down on the higher side in call option, in the case of call option. As price you are going lower than the spot price, your premium value will be high in case of call option. You wanted to ask them a question.
Sumit, is for the same price, is there a different name like in the money, out of the money?
Didn't get you.
So for X less than S, the name is called like in the money options. The X is greater than S, out of the money options. So for the equal price, is there a different name?
At the money.
At the money.
I'll talk about this.
Okay. Thank you.
It is at the money option. So the highest demand will be for at the money options and in the money options. The lowest demand will be out of the money options. Because if the stock is already trading at 100, the chances of it go to 100 to 105, 110 is high. Because in a month, the stock price can go up by 5, 7, 10%. But going up by 40% is very low. So the premium is going to be very low. Right? Any confusion so far?
So Sumit,
Now, yeah.
yeah. So basically, the market price and premium is indirectly proportional, right? If the market price goes up, yeah.
So we are talking about call option over here because all the options would be different, right?
Okay.
Now, please go ahead with your question. Now, not a call option, put options, there would be different relationship, but yes. And you please go ahead with your question. What you are saying basically?
Basically, the market price and the premium is indirectly proportional, right? If the market price goes up, the premium will be coming down, or else. I'm just Sumit, am I audible?
Yeah, I'm thinking on it.
Yeah. Okay.
You are talking about a spot price, right? When you say market price.
Yeah.
So you are saying that when market prices are going up.
Yeah, I'm just asking the relationship about.
Let's diverge into what you said.
Okay.
See, I don't have all the answers directly, right? Because
Okay,
every
okay.
question,
Yeah.
I'm trying to understand your question. You are saying that market price goes up, premiums will go down. That's what you're saying, right?
Yeah. Yes.
All option. See, premiums are decided at a static price
Mm-hmm.
with respect to strike price, right?
Okay.
I get what I'm saying. Now, new premiums will be on new options. So with price market goes to 105. Market price goes to 105.
Mm-hmm. Mm-hmm.
This option will become what? At the money option. Right? And all of these options will be in the money option. And each of them will subscribe, will let the option exercise. You get what I'm saying? Why? Because each of them will get a 5 rupees of profit. Minus the premium. But premiums, what is you are referring to market price with respect to premiums, right?
Yeah. Yes.
So if market price goes up, premiums will also go up.
Okay.
Think
So
about
that,
it. It would be different. I don't know. We can't create a relationship like this, but
yeah,
I
we
don't
can't create. Yeah, Sumit, we can't create a relationship
because
between
there are
market
three
price
type
and
of options. In the
yeah.
money options, price will go up. In the money options, price go up. Why? Because this is 60, right? As market price become 100, in the money intrinsic value will change from 40 to 40.45. 40 to 45. Look at it. If market price goes from 100 to 105, for Aarti, in the money option, intrinsic value will right now is 40, will go to 45. So obviously JPMC will charge 45.5 as premium, right? So for in the money options, yes, the price will go up. Let's look at the money options. Yes, for them also price will go up. Here the price will be 8 rupees. Because right now there is no intrinsic value, but as soon as the market price go up to 105, this option will have intrinsic value, right?
Yes.
So this from at the money, it will become in the money. And JPMC will charge 5 rupees of intrinsic value plus 3 rupees of premium, right? 8 rupees. So for that also, for Anshika also premium will go up. For Anuja, the premium will go up because at the money option, even though there was zero intrinsic value, but 3 rupees was the premium, right? Which was higher than 2.5, right? So now this is the scenario over here. For all those, the premium will go up. Does it make sense?
Yeah, yes, okay.
Yeah. So see, every question is new, so I sometimes may take some time to answer your questions. Please bear for me for that. But I just never thought like that. So you asked the question, so I now thought it like that.
Thanks.
Okay. Now, these are American style of options. Since the premiums are paid, everything is done. Now on 7th July, for example, the spot prices changes to 58. What is the spot prices? It changes to 58. Tell me what will be the action on each of these by each of these call option buyer. What would Aarti do if the spot price is 58? What would Aarti do? Would Aarti left the option, wait for it, or exercise the option? Aarti has paid a premium of 40.5 for a strike price of 60. Now the spot price is 58.
She should buy.
Hmm?
Buy. No?
Buy means what? She will buy at
Exercise.
60, sell at 58. If
Oh,
she
sorry.
exercise Nehal,
No,
she
no,
will
no.
buy at 60, sell at 58. 2 rupees of loss on the top of 40 rupees of premium already paid.
Premium.
The loss will increase from 40 to 42.5.
Agree.
What would Abdul do?
Wait.
What would Krishna do?
Okay, everybody will wait, right? In this case.
Yes, everybody will wait. So either they will let the option lapse or they would wait. Right? And JPMC people will dance. Why? Because all those premium which it has received after selling all these options is equal to 135. Right? They would remain the net gain for JPMC. Right? And net loss for the premium buyers. Right? But if the spot prices goes from 58 to, for example, 112, what will happen? Who will buy? Who will subscribe? Who will let the option let go? Tell me.
For
What would Aarti do? Tell me.
Buy.
Will buy at 60, sell at 112. Our profit will go up from minus 40.5 to
61.5. No. 50.
See, if she buys at 60, sell at 112, what is the profit? Think about it.
52.
And what is the premium she has paid?
0.5.
40.5.
50.
40.5, right?
40.5.
What would be the net profit?
11.5.
So she will go for it, right?
Yes.
Yes or no?
Yes.
What would others do? Would be based on what is their net gain. So who will let the option subscribe, or who would let the option exercise? All the people from Aarti till
Anuja.
for Chetan, it is no profit, no gain at this profit, because it has paid a premium of what? 2.
2.
At 112 price, he buys at 110 and sell at 112. Profit will be 2. So for him also, he would subscribe. Why? Because at least his overall loss is going down, right?
Yes.
If he doesn't subscribe, his loss is minus 2. If he subscribes, his loss will reduce to 0.
Yes.
But for all the others, the loss is increasing. For G Revati, the loss is going up from -1 to -4.
That's what.
And so on and so forth. So till Chetan, everyone would go ahead.
Yes.
And if that happens, you can calculate the net gain for JPMC based on this. At a price of 112, what is the net gain for JPMC? What will be the net gain for JPMC?
Only the last.
Net gain for JPMC will be equal to
20.7.
See, JPMC will have a loss equal to 74.5 and will have a gain equal to 53.8. So overall, it will have a loss of 20.7, right?
Yes.
At the price of 100, the price of 112, right? If price goes, so accordingly, if price goes down to 96, who all will subscribe? Look at it. Nobody. Yeah, somebody. Think about it. All those people whose losses are going down from the premium which they have paid. So for Aarti, the overall premium paid was equal to how much? Minus 40.5.
Hmm.
So at 96, if she subscribes, at least she gets some money back.
Yes.
Right? So her loss goes down from minus 40 to minus 4.5. Right? So people till here, till Ankit, will find that their losses are going down. Right? Rest everyone will find that their losses are going up. So those whose losses are going up, they will not subscribe, right? They will not let the option. They will let the option lapse or wait. So that is how you can look at it. That is how these dealers make money. Dealers make a lot of money at this. Just try to understand. Even if her loss is going down, still, it's being an American option. The greed in Aarti can increase. The Aarti can say, okay, at the price of 96, I'm getting my loss reduced from minus 40 to minus 4. But still, let me wait because I have 1 month's time, right? Prices may further increase. My loss may further reduce, or maybe I start making profit. But still, you need to look at it. JPMC is playing a role of probability. In 1 month's time, prices to go up from 100 to 140. First of all, the probability is very low. Second, at any point in time, prices to go below 100, the probability is 50%, and prices to go above 100, also the probability is 50%, right? Prices can go down from here and prices can go up from here. Both ways, the probability is 50-50%. So they're taking a calculated risk over it. And in this process, they would end up making profit by having premium. Sometimes they will end up making losses also. If the prices really go to 140, all of these people will opt for it. See, 140, if it goes, then everyone will opt for it. Everyone. Other than Krishna, because Krishna would remain indifferent. Because for him, the net loss is minus 0.05. If he subscribe also, his loss remain minus 0.05. Rest every one of the people would go for it. And they will make a profit of 384.7. All these people combined will make a profit of 384.7. So the profit of all these people is equal to loss of JPMC, right? So JPMC will make a loss of 384.7. So it's a game of probability, yes. That is how JPMC become a dealer, by becoming a writer of the call option. Is it clear, guys? We'll further talk about put options and exchange traded call options and all in the next session. We'll continue with our discussion, but so far, any questions, tell me.
No, Sumit.
Yeah. No, you said, or you want to ask a question?
No questions.
Okay. All right. If there are no questions, guys, we can close off the session over here. We can continue our discussion in the next session. Till then, please continue study. Have a great week ahead. Enjoy your working, whatever work you are doing on a regular basis, and we'll meet on next weekend.
Thank you so
Yeah.
much.
All right. Thank you.
Done.
Thanks a lot.
Okay.
Bye.
Thank you so
Goodbye.
much. Bye.
Thank you.
Bye, Sumit.
Thank you, sir.
Bye. Thank you.
Thank you, Sumit.
Thank you.
Thank you. Bye, sir.
Bye. Thank you, Kamesh. Thank you, Harshita. Thank you, Shrey, Shubham. Thanks,
thank you,
Anand.
sir.
Thanks, Anand.
Thank
Thanks,
you.
Ramesh. Yeah.
Sumit,
Yeah, Ramesh.
sir, actually, due to some technical issue, network problem, I am unable to attend at the attendance time due to I am in
But
traveling.
I have marked you present for today.
Yes. Okay. Thank you.
All right, guys. Thank you. Thank you, Shruti. Thanks, Vijay. Thanks, Sujata. We'll meet next weekend.